Ladies and gentlemen, welcome to LTI Mindtree Investor Day 2024. As we embark on this exciting journey together, get ready to be inspired as we unveil the curtain on new horizons and showcase the path that lies ahead. Let's begin this event. Hello and good afternoon, ladies and gentlemen. It's a bright, sunny afternoon today, but tell you what, it's even sunnier in this multipurpose hall because of the presence of some of the brightest minds in the industry here. My name is Madhur Bhayana, and I'm your host for today. It's an incredible honor for me to be standing in front of such an accomplished audience, consisting of global leaders, innovators, visionaries, and luminaries from the business world. Today is the day that we explored the bold ambitions, visionary strategies, and transformative innovation. It doesn't get bigger than this, let me tell you. As we move forward, I want to tell you, what's that sound all about? I don't know, did you guys hear that? Oh, again, sounds like a heartbeat. Did you guys hear? Show of hands, yes? Yeah? Wow, that's amazing. Ladies and gentlemen, it warms my heart to say, because you were able to strike a chord with the LTI Mindtree heartbeat, I just want to express thank you for being in love with LTI Mindtree. We share a beautiful relation. And on that loving note, let's get back to doing what we are best at, shaping the futures together. And that calls for a clap. All right, that's nice, that's very encouraging, thank you. The theme for today's Investor Day 2024 is Elevating Outcomes. It reflects our deep commitment to innovation and making meaningful impacts. Through a series of thought-provoking presentations, we will delve into the priorities that matter the most. By the end of the day, we aim to leave you with not just commitments, but actionable strategies that resonate with our resolve of taking businesses to the future faster. Without further ado, let's dive in. Our first speaker truly needs no introduction. As the CEO and Managing Director of LTI Mindtree, he has been instrumental in shaping our organization's vision and driving the strategies that have positioned us as a global leader. A renowned industry figure, his unwavering commitment to innovation and excellence has not only transformed our organization, but also inspired countless individuals within the industry. Ladies and gentlemen, please join me in welcoming Debashish Chatterjee, fondly known as DC, to the stage. A big round of applause, please.
Good afternoon, all of you. Thank you for being here. I hope you like the campus and also the AI showcase that we specifically put together for all of you. I hope there were some takeaways. I already got some feedback that how are we different in terms of AI, so probably I should be able to cover some of those aspects as we talk through our presentations. So what I will do is I will talk about why and what. And my leadership team, who has assembled here, they will talk about the how part, which is the more difficult part. So with that, let's just dive in. So those who have been there in 2023 Investor Day, raise of hands. So do you remember this slide? This slide was there, but there is a change in that. The only thing I'm saying is the industry that we are in is pretty resilient by habit. And it has gone through multiple situations in 2001, 2008, 2020, but we have always been resilient. But if I just look at the last 2 years, a lot has changed. We had this OpenAI coming out with ChatGPT in November 2022. Since then, it has been only AI and generative AI that has been part of our conversations. We also talked about the paradoxical times that we had embarked on, but the paradoxical times have changed but not completely gone away. So AI is basically the game-changing innovation that we are talking about at this point of time. The geopolitical crisis we are all familiar with. And the most important thing from our perspective, from an IT services company perspective, is the spend that we used to have from our clients, which we used to call as discretionary spend, that has dried up in the last 2 years to a large extent. And the change that we are seeing right now is quite rapid and quite structural. The client priorities have changed. I don't need to dive into the details because I have been talking to a lot of you from time to time. And the last 2 years, you probably have heard the same thing, that the discussion is not coming back. The focus is on cost takeout. The technology landscape is also changing very fast. There are multiple technologies coming and hitting us. Today, you started with one LLM, but there may be so many thousands of LLMs which are available right now. The deal contours, I think those days are not there where we were talking about $1 billion, $500 million deals. It's all much smaller. $50 million, $100 million deals. And the deal contours are also changing from a more of an efficiency standpoint. Most of the deals that we are working on right now, it is about how do you leverage AI, but can you leverage AI and generate more efficiency in the system? Can you take cost out of the system? And of course, the competition mix. The competition that we traditionally used to have as other tier 1 and mid-tier companies, but today there's a competition from many of the boutique firms who are trying to reinvent themselves, and not to forget the GCCs. So with that, we think the change that we are talking about has to be much more disruptive rather than incremental. The playground for the future is evolving fast. I don't want to spend too much time on this. All of you understand this, led by generative AI. But sustainability is becoming very important. The cloud services, especially security and infra, as a service is becoming more and more prominent as we go along. I think all customers are now very open to as a service. So let me just take a step back and explain to you what I mean by the leading to the next S curve. If you go back to 1930s to 1950s, one of the things that happened in the US was they were really building out the roads and the infrastructure. And today, whatever is there in the US or whatever US claims to be the largest economy in the world would not have happened if they had not invested in terms of the infrastructure. Because of the infrastructure investment, they had tremendous economic growth, whether it's construction, retail, logistics, or manufacturing, whichever industry we talk about. If I move forward, if you look at in the IT world, there was a tremendous acceleration towards cloud. And when we talk about acceleration towards cloud, that was the one which actually helped us in terms of the digital at scale. I think the unique thing that happened during the pandemic was clients started becoming truly digital rather than only doing digital. And this was the cloud computing which was kind of driving that digital wave. So our view is that as we go into the next era, it is going to be GPU computing. All of you have heard about NVIDIA and the kind of discussions, conversations we have been having. And if you look at AI, and if AI is real, which we firmly believe in, I think it will require a lot of GPUs as well. So the future is going to be all about GPU computing, which will help AI to be at scale. And the reason why I say this is the next S-curve, just like the way there was an investment in roads way back in 1930 in terms of infrastructure, tremendous investment in terms of cloud. I think the next level of investments that you will see from companies in terms of setting up their environment is going to be GPU computing. We have a very bold ambition. I think all of you know that we have been talking about it, and we'll try to articulate a few ideas that we have gone through. We definitely have an ambition. This is something which we have been talking within the organization, maintaining consistent profitable growth, but how can we get to a $10 billion organization? Because it requires the right foundation, et cetera, which I will talk about. But our journey to a $10 billion is going to be very unique. If you look at many of the other companies which have gone from a $5 billion to a $10 billion, they have been banking on a few very large deals. The situation that we are in right now, with all the factors that I articulated earlier slides, it's not going to, there's a lot of rapid technology changes, disruptions happening, no easy dollars. I kind of say that today we are in a red ocean kind of a scenario, is no longer blue ocean. The red ocean means today the number of vendor consolidations that we are participating in are quite significant. And when you participate in the vendor consolidation, you win some, you lose some, and you have to come out in the winning side. And that's what we have been trying to do as much as we can, and we have been fairly successful. And of course, the new competition dynamics that we are talking about. So our journey is not going to be easy. It is going to be very unique. And we assume that it is not going to be on the back of significantly large deals that other companies benefited in different macro and market conditions earlier. So we have a very clear view in terms of what do we need to do to get us to a $10 billion. First and foremost, we have to have a strong foundation. Do we have a strong foundation in terms of our base? And that's something which I will talk about in the following slides. If you have a strong foundation, then you need to have a strategic pivot. What is your strategic pivot to kind of get to the next level, the next S-curve, or the next 2-3 S-curves as we go to the $10 billion mark? And last but not the least, how do you turbocharge your portfolios that you have? So our view is that foundation, strategic pivot, and turbocharged portfolios, these three will actually help us in terms of get to the next level. So let me touch upon the strong foundation. If you look at our foundation, which is the base for growth, we firmly believe that there are a few verticals that we have which are fairly well scaled. If you look at BFSI as technology as two verticals, both these verticals are billion-dollar plus verticals. We work with 100 plus Fortune 500 clients, so we have a very marquee client base. We have deep horizontal capabilities. If you look at the capability, something you must have seen in the AI showcase, the amount of work that we have done around data and analytics, which is also helping the AI journey to a large extent. The experience, core, and cloud, these are 4 building blocks that we have in terms of our capabilities. And of course, the top-tier partnerships with the hyperscalers, whether it's a Snowflake or a Databricks or any of the other standard hyperscalers. And also the core platforms, the partnerships that we have with industry platforms like Temenos, or you talk about Duck Creek, Guidewire. So all these things actually help you in terms of foundation. Now, when you have this kind of a foundation, I think we can take a lot of pride saying that we can compete with anybody else with this foundation. That's the most important part. Coming to strategic pivot, you might have seen this earlier already, but let me just tell you a story. There was a time when we all talked about blockchain. All of you heard about blockchain. Now, it was not probably required. I mean, whenever new technology hits us, it is our job as leaders in the organization to figure out how that technology is going to change things for the future. I'm just taking an example of blockchain. It did change a lot of things, but it was not a mass movement. It was not something that everybody had to learn blockchain overnight. But there are technologies which come, which becomes very pervasive, and AI is one of those. And when something becomes so pervasive, it is very important that our clients, our partners, our employees, the leadership, anybody we talk about, everybody has to understand what's happening in the AI world and how do we take advantage of AI. And the only way to do that is if you have a very clear messaging and understanding within the organization, and the only way you can do a clear messaging is by keeping your messaging very simple. So what you see over here is our simple way of messaging as far as AI is concerned. Each of these building blocks that you see over there is extremely powerful, and which I think Nachiket and team will elaborate on that in the following presentations. But fundamentally what we say is, we do AI in everything. So whatever we do for our clients, for ourselves, within our organization, whether it's a HR function or a procurement function, so we infuse AI in everything. And this is not something where clients come and ask us, can you infuse AI? We do it proactively. So that's the first thing. The second thing is everything for AI. As you might have understood by seeing some of the use cases in the AI showcase, AI cannot stand on its own. It has to have the right infrastructure, the right data fabric. Everything is required for AI to function. So when we do projects for our clients these days, bulk of the conversation is around what infrastructure do you need, what data you need, what guardrails you need to create for ethical AI. So we need to do everything for AI, because this is an opportunity for us. Whatever a client needs to set up their AI environment, we can actually help the client to do that. So that is everything for AI. And AI for everyone is, look at our organization and make sure that everybody in the organization understands how he or she can play a role in the AI journey of our clients, of ourselves, and of the entire population within the company. So we empower people, we create personas, we ensure that everybody has their personas, and with the respective persona, they can have a co-pilot. So all these things, all these three things, if you have to do it in tandem, then I think we are really creating a culture within the organization which is more AI-centric. So we don't use the word AI first, but basically what we are talking about is putting AI at the center and make it very, very pervasive within the organization. Every conversation has to be led by AI, and that's the only way we can make it very pervasive within the organization. I don't want to speak much because then I will be stealing somebody else's thunder, so I will proceed. I just want to give you a couple of examples, what we have already done in terms of moving things live. What you see is over there is a legacy migration that we are doing for a large insurance customer, where more than 200 applications have been moved into production, leveraging AI. And this is more of an engineering case study, where AI is used to do code conversion, and the effort reduction was almost like 50%. The other example is what we are doing for a British FMCG company. We create content for making designs for product launches, basically reducing the time to market by 40%. What it means is this company can actually do their campaigns much faster, which will actually help in terms of their revenue line. Last but not the least, we talk about, this is a global consulting leader who have reduced the manual effort of researchers by 50%, freeing up valuable time for the researchers. And we achieved an 80% improvement in the prediction accuracy, which is basically you take effort out of the system, cost out of the system. So essentially, when you talk about AI as a strategic pivot, whatever we do results in either it's an engineering use case or it's a revenue use case. Revenue means increasing the revenue for our clients. And last but not the least, it's an efficiency play where we take cost out of the system. So the third one is the third aspect is the turbocharging of the portfolios. If you look at us, you already know that BFSI and technology are the two largest verticals that we have. And of course, media, communications. And these are the verticals where we are dominating. And we also have other verticals: manufacturing, resources, healthcare, life sciences, consumer business. And these are the verticals where, sorry, just a minute. Yeah, these are the verticals where we can certainly accelerate. So the way we look at our overall aspiration is we have enough headroom to get to the $10 billion path by focusing on what we already have. It is not that we need to do something extraordinary. If we can just stay focused in terms of domain capabilities in these industries, focusing on the solutions that we can produce, we can actually get there. Our view is, when we say dominate, we can actually grow it by at least 2 times over the next several years as we go to the journey. And when you say accelerate, we can grow it almost 3 times, approximately, as a part of our journey. And not to rule out the fact that we are right now in a position where we can do strategic acquisitions as well. We have enough bandwidth, leadership bandwidth within the organization where if we do an acquisition, we have cash in the balance sheet. We will never do an acquisition for the sake of doing an acquisition, but if we do an acquisition, we are very confident that we can integrate that within the organization. But as you talk about the verticals, the capabilities that you require, again, is something that is very simply articulated. We talk about innovation and core, which is the data as well as the enterprise apps. And we also have the other side, which is the experience in commerce and foundation. We feel that we already have a dominant position in innovation and core, and we can certainly accelerate the experience in commerce and foundation. And last but not the least, we also feel that there is a potential disruption that we can do in the platform operations. And this is one area where we have been investing our time in the last several quarters, I would say almost more than 1 year. And we feel now we are in a position, and you will be probably hearing some of these things hopefully in the coming months. We are in a position to disrupt in terms of the platform operations as well, because this is one area, or this is one space, where AI could really play a disruptor role in a very, very big way. So finally, before I conclude, these are the 6 imperatives that we have defined. The capabilities perspective, we have to elevate the outcomes through AI and also catch the major spend waves. We have to be ahead of time and understand where the customers are going to spend their dollars and can we catch them ahead of time. The capabilities part, Nachiket will take a lead, and he and his team will walk us through in terms of how you want to focus on those imperatives. The market's imperatives, how do we leverage scale for growth, and how do we punch above our weight in some of the key verticals. Sudhir and team will walk us through that. And last but not the least, you have to have a future-ready organization. It's all about people, and if you don't have the ability to have the people future-ready, have your processes future-ready, it doesn't really help. So our CHRO Chetna will talk about the investments in talent, and Vipul Chandra will talk about how we are embarking and continuing in the journey of consistent profitable growth. So with that, I will request my next set of speakers to talk through the various aspects. They will cover the how in more details, and that's all I had. I hope it was useful, and I look forward to interacting with all of you, and please have a great day in our LTI Mindtree premises. Thank you so much.
Thank you, DC, for such a powerful opening.
What truly stood out was your articulation of how AI, anchored by our principles of AI in everything, everything for AI, and AI for everyone, is driving our transformation. With a bold goal of reaching 10 billion, we are well positioned for this transformative journey. Thank you, DC. It's always a pleasure listening to you. All right, ladies and gentlemen, our next speaker is someone who's passionate about technology and believes that it has the power to transform the way we live and work. A trailblazer himself in the world of innovative technologies, he has a unique ability to break down complex concepts into relatable ideas. His insights are not only profound, but also deeply inspiring. And that is why, when he speaks, the world listens. Ladies and gentlemen, please put your hands together for our Chief Operating Officer, Nachiket Deshpande. And he will be joined by Rohit Kedia, Chief Growth Officer, Technology Services, a visionary who has been the co-architect of our AI strategy, and Krishnan Iyer, Chief Growth Officer, Business Services, who leads our experience and platform operations businesses. A round of applause for our leaders, please.
Thank you for those wonderful words. I have two daughters, and I don't think they will agree with his statement. They don't think that I have anything to say that is worth listening. But let's see if you found it a little different than that. So as DC articulated the bold pivot that we are embarking on for AI, why we believe that bold pivot is needed, and more importantly, I think the question of so what? Everybody is talking about AI. Everybody is talking about doing everything in AI. One, how are we different? And more importantly, how does that impact our growth and how we grow? So what we'll try to do between me, Rohit, and Krishnan is try to answer some of those questions and see how the pivot to AI will enable and accelerate that path to $10 billion. The industry have gone through many paradigm shifts, right? And DC articulated some of those. But I believe if you look at the pre and post those events, the companies that have thrived are the companies who have made the bold choices and not incremental. Some of them who made the incremental choices might have survived, but definitely not thrived in the new paradigm that is around us. And that's, you look at 95 to 2000 era, largely around cost arbitrage, the global delivery model, the Indian IT services companies, you can say, got invented. Then the whole service arbitrage era where the nearshore or global delivery footprint or right shoring models came into existence, and decomposition of services was the big area that drove the growth for the Indian IT services industry. Or you look at the digital era that DC also alluded to, which was more around digital arbitrage, where you saw a lot of pure play digital players, significant skill-related investments by customers in GCCs, and all of those where digital and domain convergence drove largely the growth potential around that. But I believe we are now entering into an era which is going to be driven by what we call a productivity arbitrage. It's not just about skill, it's not about the location, it's not about the labor cost alone, but it's a genuine shift in the productivity for technology services. And that's the era that is largely being fueled by AI-driven productivity. So all the technology services did for its existence across many decades is it did a productivity enhancement to some other function, whether it was customer service, whether it was underwriters, whether it was wealth managers, whether it was any of the back office jobs. The technology came into existence to significantly give productivity to those functions. What I believe AI is doing is it's doing exactly same to the tech industry itself. It will unlock a completely different level of productivity for delivering technology as we understand that. And that's why this bold pivot is extremely critical to succeed or thrive in this new era of productivity arbitrage. These are numbers that you've all read the reports. We've seen these numbers realized in pockets as we look at those. Engineering or developer productivity is to the tune of 35 to 45%. Customer service agent productivity from 30 to 40%. Content creation productivity gains between 30 to 50%, and so on and so forth. And these are some of the areas that are reasonably proven and already in the production scale that can deliver those. So this is a fundamental change. All technology services would saw incremental 5 to 10% productivity year on year in the past 25 to 30 years. This is the first time when there is a meaningful shift in that productivity. So what does it take for us to then thrive in that productivity era, or how do we ride that wave? I believe it's not going to be around technology alone. There are so many new technologies that are being launched every day. There are startups. There are billions and billions of capital dollars that are chasing these new technologies. There are LLMs coming every single day. There are tools and platforms that are getting launched. And so it's going to be a me too if we are just going to be another company which is going after one more LLM or one more tools and platforms. But the real unlock of the productivity will happen when the technology, whatever is the best technology available at that point in time, is ingrained in how you do your business. So fundamentally, rethinking services is going to be an important thing to be able to unlock that productivity. It's not going to be use of the latest LLM models with some trillion parameters or zillion parameters, but it's how you reimagine the service that's going to unlock the productivity. It will require material talent transformation in terms of what kind of talent we need, how we develop that talent, how are we organized as teams, how do we unlock those productivity. That's going to have a significant impact in our ability to do those or deliver those productivity benefits. And I think importantly, it also would require a significant operating model change. And as a company, as an industry, we have operated with a very similar model for the last 20, 25 years with minor incremental changes. I think this will require us to fundamentally rethink some elements of that operating model. And that's why we are basically calling it that it needs an AI delivery model from a global delivery model that we've been so used to for the last 20, 25 years. And our vision around what that AI delivery model is covered with these three key pillars that DC alluded to. That AI delivery model means we will infuse AI in every service on what and how we deliver to the client. Be it application development, be it application maintenance, be it infrastructure support, be it ERP implementation, be it interactive service, be it customer experience. Any service and every service that we do would need to be fundamentally reimagined with AI at the center. In a way, you look at this as something that we will do to ourselves. It's an inward-facing transformation where everything we do, that is LTI Mindtree, would be done differently with AI at the center. The second part is about everything for AI. That's, as we talked about, there is a lot of supplementary capability that are going to be needed for our customers to deploy AI in production, from data tagging to data labeling to bias removal to hallucination management to security guardrails, getting data fabric right, so on and so forth. So all of these requires, and think about it as new spend areas that are new opportunities for us to go and grab, and that's what will drive the growth. But I believe that both of these will become relevant only when we unlock the productivity at every persona. And that's the last bit, which is around AI for everyone. It's about not doing incremental automation in tasks, but fundamentally changing the productivity of a persona, be it a project manager, be it a developer, be it a COO, be it a underwriter, or be it the wealth advisor. You've got to look at every persona in every organization and look at unlocking that productivity holistically and not just making them 10% more free than they were before. And that's really the difference in the approach. So I'll now invite Rohit to take us deep into some of these, talk about our assets, talk about some of the customer examples to make it real.
Thank you. Good afternoon. You can hear me all right? Awesome. Thanks, Nachiket. So DC and Nachiket laid out our way of thinking about our AI strategy, which is to fundamentally transform the delivery model of the organization articulated in those three pillars. Krishnan and I will now talk about what are we doing to implement this delivery model, the kind of investments we are making, and the kind of customer success we are already starting to see. So we'll share some of that with you. So let me begin with AI in everything, which, as Nachiket said, is infusing AI in everything we do. The way we deliver our services, the way we run our business. We see a huge opportunity to deeply embed AI in the way we deliver the entire spectrum of our services, from experience to data analytics to enterprise apps to infrastructure and security to business process operations. We see a huge opportunity that can create impact for us in two ways. For our established services, it can increase the competitive differentiation so that we can grow our market share in existing markets. And then we can also enter new spaces, such as DC talked about platform operations, with a completely reimagined AI native approach rather than chasing the old way of doing those things. Let me take some examples. AI in experience. The space of content design, creative design, has often been limited to agencies. With the power of Gen AI, we think we can attack that space with AI-assisted creative design process, if we combine the creativity of our designer with the power of Gen AI. We are already pretty dominant in data analytics. We think we can take that to entirely new level with capabilities such as conversational analytics. Imagine if you can just talk and get insights about your business, you can completely democratize insights in any enterprise. Or things such as AI-infused data quality. Data quality is an Achilles heel for most enterprises trying to get value out of their data investments, and we think AI can impact it in some significant ways. Take enterprise apps, for example. You folks know us as to be very strong in this space, but we think we can create another level of competitive differentiation by infusing AI in things such as business process design. Our SAP team, in fact, has already built a domain language model that codifies the intelligence associated with an SAP lifecycle. And we are already using it for things such as business process design, content localization, and so on. And then think about a space such as business operations, which is a new space for us, but we think we can disrupt that market with an entirely new approach where we move away from a people-heavy approach of delivering business process operations to an AI-first approach of delivering business process operations. So all of this put together, like I mentioned, can allow us to either grow our market share in established services or to enter new spaces in a completely different approach. But above all, we see a huge opportunity to infuse AI in the very heart of our business, which is IT operations and engineering. What you see here is a completely reimagined approach on how we can deliver IT operations and engineering in an AI native manner. At the heart of this approach is something we called as knowledge fabric. Now, those of us who deal with large enterprises realize that enterprise systems are complex, fragmented, full of legacy technology, and these things have limited the amount of automation you could achieve with traditional approaches. A lot of the information about these complex estates is in unstructured form. It is buried in document silos. Sometimes even documents are not there, it is just code. In past, you could not access that information, and therefore you were limited in how much automation you could achieve. With the power of Gen AI, we can now tap into this unstructured information and convert it into useful intelligence. So we are now investing in tooling that can allow us to build end-to-end knowledge fabric for enterprises, which consists of IT and business ontology, which consists of knowledge graph, which is correlated information about an enterprise technology estate, and which consists of small language model where you can convert the unstructured information or unstructured knowledge about an enterprise into useful intelligence. We then add to this knowledge fabric AI agents and agentic workflows to achieve task-level automation or end-to-end workflow automation for complex tasks in an operations and engineering lifecycle. And finally, like Nachiket said, we empower the DevOps personas, roles such as system administrators, software engineers, business analysts, with co-pilots purpose-built for them, using this capability so that they can be doubly, triply more effective in what they do. This is one more point I will add, is knowledge fabric is not just important for advancing or achieving the next level automation, it is also a tool to de-risk transition. Some of you will know that transition is always seen as a risky endeavor where human-to-human knowledge transfer is perceived as high risk, and sometimes it creates barriers to doing deals. Now, we think with this knowledge fabric approach, we can do machine-to-machine knowledge acquisition, and it can lower the risk barrier that our clients see in moving work to us. So we also think it is a deal-making enabler because it de-risks transition. At our size, we have the muscle to invest in this. Yet at the same time, we can be very aggressive because we think we have way more to gain than to lose. Yes, we have to commit certain efficiencies in our book of business, but I think there is an order of magnitude greater opportunity for us to grow our market share and to essentially do competitive displacement using this approach. All the research we have done, we think this is the industry-leading approach. Our clients have told us this is an industry-leading approach to deliver IT operations engineering at scale for complex enterprise environments, which is essentially our target customer base. So rather than talking about it, let me just share some examples with you. So this first one is an example, a customer story where we recently won an end-to-end application management engagement with approximately 500 plus applications. In the process, we did commit certain efficiency improvements to them, but we also displaced 4 other incumbent vendors. As a result, the size of the pie for us grew manyfold. This particular example is one of the latest one. There are many such others where we are already seeing success of using this approach for competitive displacement. While we commit efficiency, we still gain a lot more. But let me share some other examples across our practice areas. I talked about enterprise applications. Using the LLM that our SAP team has built, this is an S4 implementation we are doing for a very large e-commerce player in Asia Pacific. The entire implementation lifecycle is being accelerated with the power of AI. Things such as documentation of business process with AI or localization of training content with AI. Just immense acceleration one can achieve in ERP and enterprise apps. DC referred to this, but what I'll add to this is this was a large mainframe legacy environment, and without GenAI related efficiencies, client would not have even embarked on this journey because it was cost prohibitive for them to do this modernization. But when the threshold was lowered, the business case became viable. And so this is the power that we are seeing in our customer conversation, is things that were not possible are being made possible with the capability we are bringing to bear. Another example of AI-assisted creative. Now, in this particular case, a food solutions company whose customers are chefs, their relationship with their chef customers is dependent on how can they empower the chefs with things like new recipes and bring those new recipes to life when the chefs can convert them into plating designs and promote their restaurants. So in this particular case, this food solutions company empowered and redefined the relationship with its chef community by giving them the power of GenAI-enabled plating designs so that they can promote their restaurants as they are building new recipes using the food products of this particular CPG company. So this is another experience transformation example. Our interactive teams done some phenomenal job here. Another example from our interactive practices around personalized campaign operations. So in this particular case, this is a top 5 global bank for high net worth individuals for wealth management marketing campaigns, greater level of personalization, almost one-to-one personalization is being achieved using the power of GenAI, and then augmented with Salesforce Einstein to better target those marketing campaigns. So as a result, you are building more intimate relationship with your prospective customers, and because of better targeting, you are getting better conversion along the way as well. Another amazing work done by our interactive team. And then finally, customer service. This is an example for a technology major where we are deploying service co-pilots at immense scale already, delivering efficiencies to them, while at the same time improving customer satisfaction and throughput associated with this very large-scale customer service operations. All of these examples that I talked about is work being done by us for our clients in production, delivering outcomes at scale. So this is the power we are already seeing when we are applying AI in everything, which is infusing AI in reimagining the way we deliver our services to our customers. But our customers also is us. So we will practice what we preach, which means we will apply AI to the way we run our business, across finance, across HR, across legal and contracts, across security operations, and our own product engineering operations. We are now deploying AI in a very meaningful way, and we are on this journey of AI-enabled business transformation ourselves as a company. So now, that was AI in everything, and the message that I want to leave you with is we are delivering outcomes at scale. All of these examples are in production, and we are seeing green shoots of success, and we therefore have tremendous amount of confidence that we are on the right track. The second thing, though, is this new opportunity that is being created in the era of AI. I'm sure a lot of you have heard that there is tremendous capital dollars that are flowing in with all the announcement that hyperscalers have made, and then all you have to do is look at NVIDIA earnings release, and you see, multiply that by a factor of 3 to 4x, and you can almost calculate the capital that is flowing in the AI development. So the AI transformation or the evolution of AI is creating a new AI economy with its own value chain, which looks something like this. First up, like DC said, you need specialized, sophisticated AI cloud infrastructure with accelerated computing at the heart of it. You then have this new domain altogether of how do you develop, train, and engineer sophisticated models, frontier model engineering. Then you have to serve those models with necessary guardrails and value-added services. So that's model as a service. Finally, ISVs are now rebuilding a completely new class of products with AI embedded in it. So there is AI-enabled digital products or AI-native digital products. And then enterprises are starting to think about flowing new capital dollars because they are seeing possibilities for digital transformation that weren't there prior to this era. So this is the entirely new AI value chain, and we think hundreds of billions of dollars are flowing in already, and it is going to continue to grow. So we want to tap into this new opportunity, and we are now building services through which we can participate in this new AI economy and address every part of the value chain. Services to deliver AI cloud services to those companies that are establishing AI training or inferencing infrastructure. Services for model engineering, such as data preparation, data labeling and annotation, or even model assurance, because model assurance, assuring the models behaving like it's expected to, is a whole new field altogether. Serving models, once they are developed, with necessary guardrails and value-added services is another area. AI native digital products, so we already do product engineering for a lot of our customers, but a whole new class of products are now being created. And then finally, our business of digitally transforming our enterprise customers with these new AI dollars that are starting to flow in. So a lot of the work is being done, new services are being incubated so that we can participate in this massive new AI economy. We're also investing in it in some unique ways. We are investing in building partnerships so that we can deliver AI cloud services to our customers, like GPU as a service. We have now built this platform. I hope some of you would have seen it during the demos. This entire AI lifecycle platform, because AI lifecycle is very different than any other past software lifecycle. So we want to create this low-code studio environment where the entire end-to-end AI development can be done in an accelerated yet responsible way. And then agentic AI software, we are ourselves investing in agentic AI software where certain parts of an enterprise function, such as customer service or finance, are getting disrupted. And we want to be the first movers to invest in some of these agentic softwares so that we can then bring them to our clients as well. Deep diving into our platform, I hope you have seen some of that outside. But this is a full stack generative AI platform that accelerates AI application lifecycle. It already works with more than 45 LLMs. But what I want you to notice is it is scaled already that we are now making 10 million LLM requests per week using our AI platform. And we expect that this is going to continue to grow. Some examples here. So for a construction major, we are now building a domain model, like an industry domain model for them, by ingesting past bid and engineering information and creating a language model through which a variety of use cases can be enabled, such as accelerated tender submission process, or such as predicting risk in large construction contracts. One example of how we are participating in this new AI economy. This is a case where another automotive major is essentially deployed our AI platform to power all enterprise search in their environment. So just a couple of examples, but there are many more. The point here is evolution of AI has essentially created a completely new economy with its own value chain, and that is a net new opportunity for us to participate in that value chain. And we are thinking very hard about what offerings will be required for us to do so. Now, the third part of our AI delivery model, which is making AI relevant for every human, for every persona. So let me invite Krishnan to take you through some of that.
Thank you, Rohit. Thank you, Rohit. Able to hear me? Able to hear me? Yeah. So what I'm going to talk to you about is AI for everyone. What's the difference between a human and a machine? Right now, while it's a very simplistic, rhetorical question, what is the machine? How do you make the machine more human-like? Right? Humans have emotion. Humans have empathy. Right? So the emotional intelligence, empathy, ethics. Now, how do you machines, machines have this capability inbuilt in them? And that's what we'll talk about. We'll also talk about how AI can be more empowering for people to do their jobs in a much, much more productive fashion. So that's what AI for everyone means. So if you think about it, the first one, AI that is humane, and the way we are going about it. So one other thing is we are training AI on a lot of diverse data sets, a lot of different, so because you have to remove bias. Because one of the things that AI can do is have the same biases as human beings have, right? So one of the things to get AI to work is you have to have trust in whatever AI is saying. Now to do that, we need to build in a lot of data sets, train it on what's right, what's wrong, or what should not be done, and so on and so forth. And therefore, you need a human in the loop continuously that reinforces this learning and continuously that trains the AI. So that's number one. The second part is about emotional intelligence. Now, how do you get emotional intelligence in AI? It's about, so what's emotional intelligence, right? It's about understanding the emotions, how do you ability to reason, and managing other people's emotions, right? So this whole emotional part and empathy part, how do you get it in AI when it takes decisions or even when it interacts? So basically, these are the things that have to be solved for when you are thinking about human and machine interaction, right? And this is where we are looking at, investing in technology, and we've already kind of done some investments, as both Rohit and DC alluded to. So that's the thing that we are trying to do, is making AI that is humane. AI for humans. Now this is the way we are looking about is how can we drive more frictionless adoption, right? Now for frictionless adoption, we talked about the first part, which is making it humane. The second part is how does every person get a co-pilot or a companion? So there are no, from a people perspective, people who are working, now the future will always be person who will have an AI twin or an AI companion, right? So that's the future. Now to do that and to make it real, we are also building co-pilots for every persona. I'll talk a little more about it as we go. and how do we solve for humanity and how do we solve for a better world with AI. Some of those examples I'll cover. So from a future workforce, we do expect that every persona will have a co-pilot. Right? We have built a lot of co-pilots already for each and every one of those personas. What you're seeing here is just a few of those examples. The first persona is of a claims agent. Now imagine an insurance agent or a healthcare agent processing a healthcare claim, giving you an enrollment kit. All of that can potentially be done by AI at a significantly faster time. So the pace at which these things can be turned around, the pace at which you can deliver to the customer, the experience that you can deliver on this, the accuracy, the compliance goes significantly. And we have not even called that out here. All I'm talking about is there is a 50% reduction in the claims processing time. But there is a whole new way in terms of how you move to outcome-based billing and so on and so forth while you do that. Second is customer service agents. Now, we have technology now that can actually interact with humans. You would not even know the difference. It's very powerful from an interaction perspective. It has the emotion, it has the empathy, it has all the technology around interruption that it can handle. So it's actually taking it to the next level from an interaction perspective, some things which many companies have not yet solved for. So this is, again, we see a significant improvement not only in operational efficiency, but also in experience and real-time analytics that you get along with it. The third one is software engineer productivity. We've talked about it, so I won't again cover it. And marketing plan, the whole time taken to create content from marketing purposes. So I've just created a few co-pilots for some personas. You will have a persona for CFO, you will have a HR persona, and so on and so forth. Every function you can think about in any company will have a persona. And this is the future of the workforce. So I'll take 3 examples to kind of highlight this. So think about a wealth advisor or wealth management advisor. How does the person start their day? At 7 a.m., you get all the market news and sentiments. Now, when you get all of these market news and sentiments, you are busy getting ready for your office or having breakfast and so on and so forth. But AI is at work. It identifies all the market sentiment, summarizes what is the impact it can have on your client's portfolio, right? So by the time you're ready to go, the meetings are set up by AI with the clients on their calendars, and you spend, and what is the impact on their portfolio? What happens, suppose oil price has changed, or the markets in US have tanked, or whatever. What is the impact on the portfolio that you are having? Immediately clients will want to know. And how do you do that between 9 a.m. and 1 p.m. From 1 p.m., some portfolio balancing decisions may have to be taken, right? Again, AI can help with that. So the number of clients you can meet actually in a day significantly goes up. And by the end, by 4 p.m., you know how you have done. It's real time. And by the end of 5 p.m., you can also plan for your next day in terms of what you need to do. So imagine the pace and productivity, how it'll change because of this. Underwriters, we already talked about. Underwriting, again, very critical area. Here we have seen at least 50%. Underwriter has to pour through tons of documents, look at a lot of stuff before he reaches an underwriting decision. Here's where we've seen the underwriter productivity can significantly double, and therefore the way insurance companies can do out their policies, the time is shortened, your customer experience becomes better, and also your accuracy becomes better. So this again is just another example of an underwriter persona. But also the last one, and I want to leave you with this, is how AI impacts humanity, and I'm kind of proud to share this example, what LTIMindtree does. It's not about only business, but it's also about how it can impact humanity. So we have an agency called the United Nations Commissioner for Refugees. What they do is they take care of all the refugees who have been displaced, who are stateless, and many of them require emergency aid, right? So and if you really think about it, over the last 5 years, the number of refugees across the world has actually doubled. The number of people requiring emergency care has gone up by almost 5x. Now imagine it's a grave situation, and the ground staff has remained the same because they don't have too much money to serve. And this is where we were proud to work with them to come up with AI to assist the people who are working on the ground to take decisions, to go through tons of policies on travel policies, resettlement policies, medical claim amounts, etc., to take faster decisions, to touch various lives. And I'm happy to tell you, we touched 120 million lives, out of which 44 million lives are children. And this is something which I'm very proud of as LTIMindtree. Significant impact, beneficiary, lot of increased beneficiary services to the refugees, and also reducing the help desk ticket. So it's not only all about work, but it's also about being human. Over to you, Nachiket. But what does it mean to all of us? I'll ask Nachiket to talk about it in terms of how do we make money?
So I think we'll just summarize the discussion that we've had so far in the 45 minutes, right? In terms of how do we translate that into the business outcomes for LTIMindtree. Rohit gave examples on how the solution approach of AI in everything can be a competitive differentiator for us to displace. And we've done that being a challenger approach to grow the market share. We have announced 5 deals in the last 6 months, all of them where AI in everything has played a huge role in winning in those consolidation and cost optimization initiatives. And we are, of course, launching new services with the disruptive proposition as well. So think about this as a cannibalization, but we have a lot more to cannibalize than being cannibalized. That's how we've looked at that. Everything for AI is winning in the new economy. It's, the capital dollars that have gone into building some of these infrastructures, we have seen in the past with, as DC gave example of road, cloud, and now in the AI infrastructure, there is a multiple of those that then gets into services to make that capital dollars earn a return. And that's really what we are looking at in participating in that new economy. And a frictionless adoption, and in helping us win in that talent war as we adopt. So hopefully this session have given you a perspective on the strategic pivot that DC alluded to, actually how it will drive the results and help us get to that 10 billion journey in an accelerated manner. Thank you all.
Thank you, Nachiket, Rohit, and Krishnan for that compelling perspective on AI being the disruptive current steering the productivity wave. It's clear that our pivot to AI strategy, anchored by AI in everything, everything for AI, and AI for everyone, is not just a strategy, but a movement that's setting us apart. Truly, truly inspiring. All right, so ladies and gentlemen, our transformative journey is rooted in collaboration, where partnerships drive innovation and success. Together, we create solutions that address challenges and inspire growth. Please join us in watching this video as we celebrate our partnership with one of the most valuable brands globally.
Successful journeys are built on solid partnerships, mutual growth, and the spirit of collaboration. I'm excited to share that LTIMindtree and Microsoft are taking our long-standing partnership to a whole new level. I'd like to congratulate LTIMindtree for the strategic partnership agreement with Microsoft. Together, we're empowering businesses worldwide to truly thrive in the digital age. As 360-degree partners, Microsoft's AI-driven services and LTIMindtree's deep industry expertise are combined for speed and scale. For our collective customers, it means faster, smarter, end-to-end digital transformation. LTIMindtree's industry expertise spans finance, healthcare, retail, and manufacturing, and they achieved all 6 Microsoft Solution Partner designations for services partners, which means they bring a breadth of experience across the Microsoft Cloud. LTIMindtree has over 13,000 Microsoft certified professionals, including Azure Expert MSP status and recognition as a Fabric featured partner, setting the stage for transformative solutions. As an early adopter and a Jumpstart partner for Copilot for Microsoft 365, LTIMindtree has played a key role in driving the adoption of Microsoft's most advanced tools. As a customer zero for Microsoft products, LTIMindtree has been an early partner in testing innovations like Copilot for Microsoft 365, leading the way for streamlined implementations and customer success.
Now that we're all back together, let's keep the energy high as we watch another AV highlighting our strategic partnership with one of the leading hyperscalers focused on achieving superior business outcomes.
Hello, my name is Rima Olinger, and I'm the North America Director for Consulting Partners at AWS. I'm also the executive sponsor for LTIMindtree Partnership. AWS is excited to showcase our strategic partnership with LTIMindtree, who is a leading global technology consulting and digital solutions company. This partnership is driving significant growth and innovation for both of our organizations. I would love to share a few recent highlights. In June of this year, we signed a 3-year strategic collaboration agreement with LTIMindtree, and the results have been great. With close to 6 months into it, LTIMindtree is already outperforming the ambitious targets of this agreement, and we're only getting started. LTIMindtree also have aligned their teams with AWS industry-focused teams, and we are seeing tremendous success building industry-specific solutions in key verticals such as travel and hospitality, financial services, retail, manufacturing and technology, as well as media and entertainment. And just last June, LTIMindtree achieved the coveted AWS GenAI competency. This demonstrates their deep expertise in the rapidly evolving world of generative AI. They're also leveraging their billion-dollar data center practice to help customers prepare for the future of generative AI on AWS. LTIMindtree is a strategic partner for AWS. They have dedicated resources that are working hand in hand with our teams in order to drive growth in our joint customer verticals. Their participation in strategic areas such as SAP migrations, application modernization, and GenAI make them a valuable partner in our go-to-market strategy. The success of our partnership with LTIMindtree is a testament to our shared commitment to innovation and customer obsession. We're excited to continue building on this momentum and unlocking new possibilities together. Thank you.
All right. So we now shift our focus to the most important aspect of our growth strategy, our clients. Our next speaker is someone who has been the driving force behind fostering deep and lasting relationship with our clients, ensuring that every interaction creates value. A dynamic global leader with a unique blend of experience across multiple continents and multiple verticals, he is the man behind significantly enhancing LTIMindtree's brand value, market presence, and client satisfaction. Ladies and gentlemen, with thunderous applause, please welcome Sudhir Chaturvedi, President, Global Markets. Over to you.
Thank you. Hey, good afternoon, everybody. Hey, dads in the audience, give me a wave. All dads? I'll come to the moms, but dads just. So, you know, I have a 19-year-old, but when he was much younger, he would walk up to me at times and say, "Dad, I'm hungry." And I used to say, "Hi, hungry, I'm Sudhir." Yeah, okay, you know, whenever I put my hand up, you have to laugh, okay? So, ever wondered where dads store their dad jokes? You know, all dads have a repository of dad jokes. You know, ever wondered where they store them? They store them in a database. So what I'm going to do today is take some data from our database and share it with all of you today. And you should take this data and put it in your AI model. And if that doesn't all result in buy recommendations from all of you, then your AI model is not working properly. There's not enough. I knew someone would say it. But anyway, with that, where's my clicky thingy? There it is. Thank you. So as DC said, talked about the market section, so we'll cover a bit about how we are leveraging scale for growth, and then I'll have my colleagues Harsh and Vijay talk to you about how we are punching above our weight in our two largest verticals. So these are the 4 initiatives, the strategic initiatives that we have underway in the markets organization. So the first is Minecraft 2.0. I think some of you are familiar with our first Minecraft 1.0, which was a resounding success in terms of scaling large accounts. This is focused on 100 accounts in the organization. And these accounts grew, so we talked about this last year that we launched this program with 100 accounts. These accounts have grown at 10% YOY, that's above the company average. And 21% of Minecraft accounts have incorporated AI in their operations. And when they say operations, in their tech operations, so in the application support, infrastructure support, security, those are the areas that we have incorporated AI in 21% of these accounts. The second is Aspire, which was our cross-sell, upsell program. And the results from Aspire are that we had a cross-sell ratio of 5.1 prior to launching this program. Right now, it's running at 5.9, so it's a 15% increase in our Focus 100 accounts. And that's 38% higher than the rest of the organization. So as you can imagine, we've launched this for the Focus 100, and then we will now expand this going further to the entire organization. But it was important to first do this for our largest clients. Project Everest was the one that we launched as we had this entire base of 700+ accounts, was to see how we actually make sure that we have proactive large deal propositions, especially as clients were looking to significantly reduce their cost base, especially in tech and ops. That was a proposition, and I'll spend some time on large deals in my subsequent slides. Project Neo was the other one we launched, was to open high-quality new logos. So we right now have 105 Fortune 500 accounts. So that's 1 out of every 5 Fortune 500 companies works with us, which is, again, I think for a company our size, that is a very, very blue-chip client base to have. And last but not the least, 20 of these new logos were opened with AI conversations. I was speaking to somebody in the break, and frankly, there is no client conversation today that doesn't start with a conversation around AI. The first thing that they ask us is, what are your AI-led offerings? And if that's not powerful enough, then there isn't much of a conversation to be had after that. And the strategy that both DC and Nachiket presented to you, our AI-led strategy, is something that's resonating well in the market. Some of the new logo clients that we are talking to see this as a differentiator compared to their existing providers. And one thing that you'll see, even in our pipeline, as I'll show you, is there's a significant amount of vendor consolidation, as well as new empanelment deals. So empanelment deals are when they're looking to onboard new strategic vendors onto their database. So that's something that we're also seeing when it comes to Neo. Okay, so large deal performance in the last 18 months. So let me give you a picture. We've closed 45+ large deals in the last 18 months, just over $2 billion of TCV. And the interesting thing is the 3 verticals that we've done the most amount of deals, which are manufacturing and resources, banking, financial services, and insurance, technology, media, and communications. These 3 verticals together are 80% of our revenue. So our 3 largest verticals are contributing the highest to from a large deal perspective as well. So we're building on the strengths that we have in the organization. Consumer business and healthcare, public services, smaller verticals also contributing. The interesting thing when it comes to the pipeline is that the consumer business is showing a very strong pipeline currently. But again, the 3 sectors that we've done, we've got this data that you can see in the pie chart is the TCV value. So so banking, financial services essentially closed $600 million worth of large deals in the last 18 months. Okay, going forward to the pipeline. So we currently have $5 billion plus TCV in large deal pipeline. These deals are, so we've changed our definition of large deals since we last met. These deals are all $25 million and above. We used to talk about 15 million and above. So it's not a comparable number, just before you start asking me questions on that. So this is 25 million and above, $5 billion plus TCV. Now, one of the theses that we had from the merger was that we will do more large deals, and we will do large deals. And that is playing out, as you can see below. We've got 21 deals in the 50 to 100 million range, and 14 deals in the 100 million plus range. We're actually also bidding a significant number of deals which are above 200 million as well in that, from a overall TCV perspective. So 14 deals, $1.9 million of $100 million plus deals. And when I reflect on why this is happening, essentially we are seen as obviously clients are looking at seeing how they can drive cost efficiencies, as DC mentioned. There's the dollar market is still quite tight in terms of there is a fight for dollars, the red ocean strategy that he talked about, the red ocean market rather that he talked about. And that's what we are seeing playing out. But what they're also looking for is somebody who brings in a fresh perspective. Who's going to challenge some of the top tier players that are there, where there has been incumbency for a while? So we are seeing some fatigue with incumbency, but more importantly, they're looking to see who's bringing a fresh perspective. So our AI-led solutions, in fact, Rohit talked about the solution that we have, which is essentially driving all our large deal solutioning. So all our large deal solutioning today is driven on the basis of the knowledge fabric that you saw, the agentic IT that you saw, and the persona-based AI tools that we are bringing to the table. So that combination, which is leading to significant productivity increases for our clients so that they can do more with less or more with the current dollars that they're already spending, that's really what's playing out. And that's why we're getting invited to these deals. We did an advisor day in Dallas recently, and we had about 50 plus advisors turn up. And when they saw what our large deal proposition was, the solutioning strategy that we have for large deals, they were very excited because that's not something that they're seeing from the other players in the market. Certainly not being played out. It's being played out in words, but it's not being played out in terms of solutions and pricing, which is what we are doing in the market. And that's leading to further deal invites so just to give you a sense, right now, amongst the deals that we're working on, there are 22 deals that are being advised by ISG, and ISG is the largest player in this sector, so you can imagine that's how we're punching. There's a very significant increase in our traction with deal advisors in the last 18 months. And just in terms of the pipeline, what is the nature of the large deal pipeline? Just, cost still plays a huge part, but I split the cost into 3 areas. So cost optimization, which is clients looking to cut costs. Vendor consolidation is usually in the existing book. This is where we are an existing player, and there's a significant amount of vendor consolidation happening. We are particularly seeing this play out in banking and technology, and both Harsh and Vijay will talk to you about this in the subsequent presentations. We're also starting to see GCC deals now, so 2% of the deals are GCC deals. So these are about setting up GCCs or partnering with GCCs or working with GCCs. Those are the deals. But what's good to see is, and sorry, let me cover empanelment very briefly. So I think some of you have known me for a very, very long time. When I started in this industry as a BDM, the highest bonus you got was doing empanelment deals. So if you signed an MSA with a Fortune 500 company, you got a 100% bonus immediately. Because it was more valuable, frankly, at that time than doing a large deal. Because it gave you a license to hunt in an account, in a large account for over 10 years. So empanelment deals are extremely important because that's how you get an opportunity to work with some of the largest players in the sector. And empanelment deals have become fewer and fewer because every client had landed up with having a ton of vendors already. So if anything, they were reducing the number of vendors. They were not adding strategic vendors to the list. And I'm talking about essentially Fortune 500 companies. So 10% of empanelment deals that are empanelment deals are essentially, these are clients that are looking to add a strategic vendor to their existing vendor list, which is again going back to the point of there is some level of fatigue with the incumbency where they feel that there perhaps needs to be a breath of fresh air, some fresh thinking to be brought in, and that's why we're seeing these empanelment deals. Good thing is, if I had shown you this slide 6 months, or even 6 months ago, you wouldn't have seen this level of transformation. So about a quarter of our deals right now are transformation deals, which means that transformation dollars are making a comeback. I would not say this is, I would still want to wait and watch for another 6 to 12 months to say that this is a secular trend. but it's good to see a good mix of cost and transformation deals in the pipeline right now. So folks, this is all I had for you today. From a markets perspective, I'm going to hand over the main show to Harsh and Vijay. We're going to talk to you about our two largest verticals that make up about 60% of our revenue. So Madhur, over to you. Thank you, folks. Thanks a lot.
Thank you. Thank you, Sudhir, for that compelling presentation and insights. Now it's time for me to call upon stage Harsh Naidu, CBO Financial Services, who has helped shape his business for the past 20 plus years. Ladies and gentlemen, please welcome Harsh Naidu. Pleasure.
Hello, folks. Thank you so much for being here, and I would like to extend again a very warm welcome to all of you. I sincerely hope that through the interactions that you've had on the stalls and stuff that we're presenting here, we're able to give you a glimpse of how we as a team are trying to make a difference. I'm here to talk about BFSI, the largest vertical for the company at $1.6 billion of pure ADM work. We are a formidable challenger. And I sincerely hope that we stay a formidable challenger for a longer period of time, because that's what is driving our growth. Now, when you look at financial services, it's a very crowded space. But I think we are beginning to enjoy a slightly differentiated, a little bit of a unique kind of a position. And I'm here to talk about how we see ourselves in the industry. So we have what we call permission and capabilities to play at scale. When I mean scale, I'm talking about scale across intellect, scale about size of the deal, scale about in terms of the reach and the global spread of deals. We also, I think, what we have done over the last few years is created a challenger mindset in the teams and empowered the teams and ensured that there is zero distance to decisioning. So you're agile, you're nimble, you can react to a situation very, very quickly. And I think that is what is helping us win disproportionately. I mean, as a unit, we've had a CAGR for the last 3 years. Our CAGR is 17% over the last 3 years. And I think this has also given us, helped build a DNA, I think, of competing. We've been in multiple supplier consolidations, and we've almost, I will actually not say almost, I'll say all supplier consolidations we've been a part of, we've been on the right side of it. Now, this is where I feel that, from moving forward, we have what we call, what I call about, I just want to lay out the scale for you in a very brief fashion. So if you take the top 100 banks globally, 20-odd Chinese banks, remove them, we work with 50% of those banks. Now, if you take the top 5 large banks globally, we work with 4 of them. 3 of them, we are a strategic partner. And that does not include our largest account. And another story that I'm very proud of is our US regional banking story. This as a piece did not exist for us 3 years ago, or it was there, but it was like irrelevant. We took a call that there is a reasonable amount of what I call vendor fatigue in this area. There is, I think, an ask for innovation. Can we disrupt this space? So we went about in a very surgical way, identifying what clients what logos we're going to go after, the teams that will go after that logo, the value proposition that we're going to deliver, and most importantly, what our first 100-day experience looks like. Ladies and gentlemen, that's now a 14-logo portfolio out of the top 20, and that's probably the fastest growing portfolio within FS. And it's not just that. We are working with 4 of the top custody banks. We are working with payment firms, and in fact, one of the largest payment providers, we're helping them rewrite or redesign their credit card platform. So we are expanding our horizons not just to our clients, but even to fintechs. We work with the top data providers. We work with 3 of the top 5 development banks, top reinsurance, 10 of the top 15 PNC companies. So ladies and gentlemen, what you see here is $700 billion of IT spend. And I think this has a potential to go to $1 trillion. So from where I sit, I'm happy that I have the capabilities, I have what I call a brand value, and I have a positioning that will allow me to grow with my clients. And why? Because of the capabilities that we've built. We've always talked about three, what I would call key pillars of our services: data, architecture, and domain. And we've really doubled down into these scales. What we decided about a year and a half ago is we said, we're not going to talk about technology anymore. We're going to take this and make it very relevant to our clients and package it in a way that it becomes more relevant to our clients' priorities. So we aligned this to revenue, cost, helping govern, and innovate with AI. I'll take you an example and tell you how we're trying to bring all of this together. Today, we are working on about 25 plus large transformation programs on core and data, right? I mean, when I say large, they're like $200 to $500 million multi-year programs. Earlier, we would approach it with one dimension. Now we are saying we are here to make a business impact. So that means if we can bring some of these services together and innovate and give you a faster result, we are happy to do that. But every conversation is about the business, because business is now getting closer and closer to technology to drive outcomes. And essentially, they are looking at how they can use dollars to drive business. When you look at this, we're saying now, OK, we are happy to disrupt ourselves. I will intervene with AI in each of these programs to reduce risk, crunch time, or whatever I could do to improve efficiency. Now, of course, that means that I am not worried about disrupting my book. I'm going to do what is right for my clients. And I think that's what is helping us win disproportionately. Another example is personalization. I mean, of course, we all have seen this whole retail thing on personalization, a lot of money spent there. What I see in the market, and I guess you all work for large financial institutions, so pardon my bravado, but product is dead. There is zero differentiation between any product. I mean, a lending product is a lending product is a lending product. What financial institutions are now doing is to see how they are going to differentiate experience in a B2B2C world, essentially creating better, catering to personas within their client organizations. Now, the fundamental difference between building personalization journeys in consumer and in a B2B2C environment is understanding of the underlying data. You need to be able to figure out what that persona is, what they are looking for, and how you're going to get that information to them. And I think that's where our data pivot comes very handy. We understand about 90 product life cycles in the industry, and how these 90 products are transacted in 100 countries. That means, from the time the transaction emanates in any country to the time it is posted in a GL, we understand that entire landscape very, very well. Rohit talked about experience, that work that we are doing, right? I mean, we do a lot of MarTech work, so we bring that together, and we bring our GenAI capabilities. And I think this helps us, this has helped us really create a very valuable value proposition, I would say, which I think is resonating very, very well with our clients. What we're also doing is co-investing with partners and others to create frameworks that can help our clients innovate. And we've even crafted a service as experiment as a service. Now, as DC said, right, the environment is continuously changing, and at the industry, we have been very resilient. But I feel that every time there is a change, there is even a bigger opportunity for all of us. I mean, as firms like us, and even for our competitors, or even for the banks that are going through that change. Today, what I see is 4 things that could potentially help us create new revenue streams. Localization. Large banks are exiting subscale geographies or subscale products. Both large banks, small banks, insurance companies are investing locally to strengthen their product base and expand their scale. We are also seeing a major repivot from what we used to have a traditional product-based organization to what now I'm calling a customer-centric organization. You are aligned to the customer segment rather to the product so that you can bring on a unified experience. And more importantly, what we're seeing is a highly intertwined regulatory regime. Now, what I mean by that, earlier the least common denomination of regulations was defined by the US. Then, EU stepped on the bandwagon, expanded the whole thing. In some cases, they define the risk on, but it's no longer that case. It's US, it's EU, it's India, it's China, it's Japan. The regulatory regime is getting complex. But that is just one dimension. After the Silicon Valley debacle, we are seeing actually a kind of a gold rush for the mid-sized banks to understand what regulatory impact would mean for them, and how do they build a strategy to navigate through that. And the third dimension to that is, there are firms, I mean, let's take card firms which are not like banks, maybe an American Express or a Capital One or some of those. They are also starting to grapple with a complex regulatory regime as they try to get a Category 2 or a Category 3 bank. So we said, can we tap into this opportunity and build some newer lines of revenue? So divestiture and acquisitions is becoming a decent line of revenue for us. Today, we are working with all kinds of companies. A large bank helping them segregate 7 of the countries. I mean, when we talk about exiting 7 markets, we're talking about application segregation, data segregation, infrastructure segregation, compliance in terms of regulations in each of those geographies. And on the other hand, we are working with a large bank which has acquired 4 entities, and now they're trying to say they all have wealth management business, how they've combined that business into one business, how we create a platform which is state of the art. No, normally we would come in at a stage when they have defined the roadmap and what the platforms would look like. But in cases like this now, we are defining the roadmap and what the platform should be, and the strategy behind the platform, what it should be. Because then it helps us position differently in these accounts, and we can win disproportionately. Similarly, the new regulatory initiatives. I think we've talked about for a long time as to how deep our RegTech capabilities are, mostly in the large, $250 billion AUM plus market. But we've taken that understanding and packaged it into what we call remediation as a service. So the mid-sized banks, we are partnering with them to understand the regulatory regime, what it would mean for them, and how we can handhold them through this journey. That means create the strategy, create the implementation plan, and actually do the implementation plan. And now we are beginning, we've already signed our first deal where we are doing from strategy to implementation on IT and ops risk for mid-sized banks. And I think these are conversations that are beginning to really build momentum. On the other hand, what we did is we went to larger banks and said, look, we've been doing this for you for a very long time. Allow us an opportunity to elevate the outcome. We will do turnkey reporting for you, work with your operations directly. You don't have to worry about your technology teams. We will create the reports, we'll give it to your ops guys, and then you can go ahead and file them. So some of this maturity is coming in how we operate in this industry. So again, in short, we feel that we have the right mindset, a very strong ground game, and I think I am exceptionally proud of the team that I have. I think probably one of the best teams in the industry. Strong capabilities, and which we continue to build, and I think continue to enhance as Nachiket and team talked about it. Permission to play at scale. Remember, I talked about $700 billion going to $1 trillion. And more importantly, what we call zero distance to decisioning, a highly empowered team that can take decisions and respond immediately on client needs. So this is who we are. I think happy to talk to you during the break and discuss further. So I would like to invite Vijay to talk about the magic he's creating in the technology space.
Thank you, Harsh, for that amazing presentation. All right, so now I have the pleasure to call upon stage Vijay Ram, CBO Technology and Software Business, who has led it to a $1 billion enterprise. Give it up for Vijay Ram, please.
Thanks, Vaibhav. Good evening, everyone. Harsh, after your story, and I really do not know whether I've got such a strong story, but for the next 10 minutes, I will try talking about the tech business and how we look at the tech business and how we are building up the tech business and what are the opportunities and where we wanted to go with those opportunities and how we'll make this business, as DC has mentioned about the 2X part of it. So we work with the clientele across from the silicon to the OEMs and to the software platforms. Now, previously we used to call silicon to systems, and I think now we started going silicon to software. So all the layers of the technology, and okay, we work with them. And another interesting pattern is, I think every industry or our customers are wanted to have a control of their value chain. If you take the semicon industry, and they wanted to send their chips directly to the industry. And if you go and talk about a hyperscaler, they wanted to have their own silicon chips. So this is a transformation when it's happening, and I think we are in the middle of that one, and thus we are playing that very, very strategic role. And when I say about that silicon, at least if you talk to us around some 3-4 years ago, or maybe beyond, we used to address only parts of the silicon customers or the semicon customers. And especially now we are addressing them with the sort of IP what we have. And our IP have got, which we have got 12 patents, and I think close to around 3-4 billion devices across the globe, which will use our IP, starting with Fitbits to the very expensive hearing aids. So now we take the IP, and we take the SoC, and thus, I think we drive with those silicon industries, which is making, previously we never used to have any play with those hyperscalers. So now, since every hyperscaler has got their own chips, and thus, I think our positioning is also becoming very, very strong. So I think if you look at it, and most of you will be knowing about it, and I think every time, and I think we'll keep hearing about what is happening in the industry. But what are these changes or these developments? How are we looking at it? If you look at it, software part of it, okay, software runs the world, and okay, everything is software. So automatically, all the platforms became very, very elastic and infused with a lot of intelligence. Then it is a subscription economy. It's no longer one sale or buying one DVD. It's a $9.99 per month sort of the economy. And thus, even if you subscribe to that one, if you do not consume it, and those software companies will not earn any revenues. And thus, it completely changes what is the customer propensity, what is the customer retention, and what is the customer experience. Of course, purposefully, I'm not going about what is the churn analysis. Because once the churn happens, and okay, again, it's very, very difficult to get the customers back into the game. Hence, you consistently need to know what the customers need it, what customers are consuming it more, and what is that sort of a demographic. Unless otherwise we understand this one, we cannot really influence those sort of the revenues for our customers. Then comes the dynamic pace of innovation. Gone are the days that, okay, we will be waiting for 1 year or 1.5 years for the next release. If you look at it now, many of those releases are coming on a weekly basis, and few critical releases come on the alternate day basis. Hence, the entire of the software development lifecycle, or the feature development lifecycle, and the way you manage the product backlog, and everything is becoming very dynamic. Thus, you need to know what you know with your customers, and okay, what your customers need. And with these things, because I think we are there in the center of that one, because we see these sort of trends, and I think we live with that one, okay, we earn our living with that one, we sweat with our customers day in and day out. So, most important thing is, as I said, and I think we work with the leaders, and on their products, and definitely we'll build those sort of the relationships. And we work for their customer satisfaction. And most importantly, I think a very uniqueness about the business what I run is that I think we work with the customers' business and the revenue generation centers, not much on the cost centers. Hence, we drive the revenues for our customers. And another uniqueness of this industry is, and I think this is the one which runs on the 360 degrees partnerships. Sometimes we need to create those partnership ecosystem, and even with some of the competitions as well. And till the last 4 decades, and I think those 2 companies which are competing fiercely in the market, and now they are the partners, and I think each one is there on the other's ecosystem. I'm sure that you must be following it up in the market. So in that sort of an ecosystem, we need to play it differently. Thus, we will be relevant. and I think we are definitely that relevant. That's what our customers see, that we are relevant. Hence, we are growing with our customers. So I will just take a few examples, and I really wanted to walk you through a few examples, and I think which predominantly defines the sort of the scale at which we do things, and the innovation what we do it, and the complexity what we deliver, and of course, how we do the efficiencies. As Harsh has mentioned, that I think we will cannibalize our own business, and for staying relevant to our customers, and that is the efficiencies what we will drive, thus making our customers to expand while they're innovating and by driving those efficiencies. So here is one, and I think I just tried to put that the life cycle value chain part of it. We work with, for many of our customers, their marketing organizations, sales organizations. And look at the sort of a scale what we do. We do at 2 billion, the meaningful campaign impressions, and for one of the largest ISV. And for another for the ISV, and we will do the 80% of the personalization match rate. That 80% of the personalized match rate by getting it, and I think we really spend those dollars of our customers in a very efficient way, but the biggest bang for the buck. And to do that one, I think we need to understand what exactly their customers need it, and how we need to run those campaigns, and how we need to do those personalization matches. At the same time, and I think now I'll just talk about 3 examples only under that product development and engineering, and I just mentioned about it, like how the product development life cycles, how they're changing. And now if you look at it, the ISVs, or for that matter, every of the company will have their products as in the platform, because they will have an on-prem product, and they also will have a cloud platform, so everyone needs a 5 nines and 4 nines, 3 nines sort of the availability. And that is availability what we deliver to one of our ISV. And while we are doing it, and as I mentioned it, because they also wanted to do those efficiencies and total cost of ownership to be reduced, and to a large networking measure, and I think we delivered that one. And another global data management company, and I think we also have given that sort of an upliftment. It's purely by reducing the development life cycles, and also with a proper prioritization of their features. Hence, what features can earn them the money, and I think we could able to deliver it much more quickly. And this is one thing, and I think which will take a lot of pride in this one, because I'm sure that one, because for the last 1.5 hours, you would have heard AI. If anyone can tell me the count, and I'll be very happy. Probably I counted till 600. Afterwards, I left it. And that AI, the power of it, as DC has mentioned, the GPUs and the data centers, right? And I'm sure that when in the last 6 months, if you would have sum total and arithmetic sum of one of the leader going across the Southeast Asia and making those investments, I'm sure that you would have counted more than $35 billion of the investment which is going for those data centers. And what is the crux of those data centers? And previously about those sort of the build out. This particular ISV, what we have did that to build out that 90% of the build out cycle reduction, you'll be surprised. Previously, at least 13 years ago, we used to spend close to around 45 days to 50 days to make a build. That means that that much of a delay for you to roll out those features. Now I think we do it less than 1 day. And look at the number of clusters. I'm sure that when you know about it in the data center, look at the number of clusters, and look at the 4K clusters per year, and which we'll build. Which makes us the most wanted partner for all the hyperscalers and all the people who are doing those data centers, because if you look at it now, even the colos are in great demand. And hyperscalers are short of their budget, at least anywhere between 300 to 350 megawatts of the power what they need in these data centers. I think they're short of it. So with this one, we have really identified, and we build our services with this sort of a proven experience on those 3 big rocks. I think these are the rocks I will keep telling my boss. was, these are all the rocks I wanted to go after. That is the data center infrastructure management, which is completely different than a standard IT or the enterprise infrastructure management. Then the facility management, which requires the sustainability and all the carbon footprinting and reporting and so on and so forth, and the data center critical equipment. And these are the offerings which we really, really leverage with our ecosystem. Again, another important thing in this industry is, I think the point solution days are gone, because now everything we do we build it with that ecosystem part of it. Whether it is through the partners, whether it's the OEMs and with the hyperscaler, and whether it's the device manufacturers. So here, I think we leverage with our next offerings, and we'll build those things. And okay, I think this is going to be, as I mentioned, I think it's a huge, huge market, and I think which will allow us to really, really maintain that leadership position there. This is another thing is, now, if you look at it in every of the software vendor, I think they always wanted their clients to be migrated. And we just migrated, it's for the large ISV, it is less than 18 months, we migrated almost around 1.48 million cores. So these things will show not only the scale and the complexity. I think I'll quickly go through, I think in the testing and validation, and okay, we'll make it the faster time to market, because most of the times what is happening is, we have noticed it with our customer experience teams, when the features are getting delayed to be rolled out, number one, that I think the propensity is increasing, because the people will just use the free and then they just drop off, they do not even pay it as the subscription. The second thing what is happening is, and I think their consumption is getting less. So hence, and I think most of the times, the testing and validation is becoming very, very important. From the conventional software part of it, the platform validation is completely provides a different complexity. Of course, the training and the documentation is another thing is, most importantly, the budgets of our customers are reducing because they are reducing their channels and the channel partner investments. Thus, how much you can do more by leveraging the Gen AI is the one, and I think which we, because these are all the things which we have learned, the way it is becoming faster, and okay, we come out with a service offering, and thus we make it as an ecosystem play, and thus we land it. That is where I think we could be able to very confidently say, and we are a bit ahead with our competition because of, by learning these things much faster. And this is what the scale which I talked about it. And I think we do the 55,000 of the cases which we resolve, and almost for 40 plus products and in 14 languages, and spread from across the globe. What is it doing? And I think with this, the highest customer satisfaction which we deliver, hence our customer can retain their customers. And the most important thing is why we are very strategic. I can keep telling that, and I'm a very strategic part, But I'm strategic for a simple reason. I'm the first person to understand the voice of my customers' customers. And we deduce those insights. Then we leverage our customer sales teams and the account teams. And in quite a few places where we act like our customer sales teams also to their customers. Then the second thing what we do is, and okay, we will also create the product backlog, and I'm sure most of you are aware of it, how critical it is a product backlog for a product engineering company. We create the product backlog. We also provide that feature prioritization, which is making us a very, very important strategic partner for our customers. So I can go on and talking about it, and I think during the next break, and I think I will be more than happy to share with you and many more examples than what it is there. Thus, I think on my closing thoughts are, so we are doing this one, it is good, then what do we do? And I think we are very, very confident, and I think few cyclical segments in this entire tech industry, but I think overall industry is poised to grow at least 16 to 20%. And I think we definitely wanted to grow at those sort of the percentage. How? Definitely we'll grow with the customers. And many, many times, we will continue driving their growth as well. Then the second thing is, we really, I think all the investments what we are making and the knowledge what we have gained, we leverage that one. We do that platform engineering because I think if I have to throw one number, and I think I can very, very confidently say the SRE as a skill or the competence, what is required for the platform engineering or observability, we are undoubtedly, I think we command a pole position. How did we do it? Because we manage those sort of things. But those things are getting disrupted, and I think we really, really wanted to disrupt that one. And the next is, as I mentioned about, we wanted to ride the semicon and the data center wave. And we are very confident because right now we are in a multiple of the conversations. Again, I think gone are the days that we don't work on the point solutions, we do not work on those discretionary deals, and I think it's a multi-year deals led with the ecosystem synergies, and I think we are very confident to grow like that. I think with that, I think I'll just give it to Madhur. Over to you.
Thank you, Vijay. And I would like to take this opportunity to thank once again Sudhir, Harsh, and Vijay for walking us through how LTIMindtree is capitalizing on major spend waves, scaling focus verticals, and building the next generation organization to deliver consistent growth. Well, it's quite evident that our customer-first approach is at the heart of our journey to becoming a 10 billion organization. Okay, so now we will deep dive into our commitment to cultivating the talent of the future that places our employees at the core of our organizational success and growth. Ladies and gentlemen, it is my absolute pleasure and honor to introduce the next speaker, the Chief Human Resources Officer of LTIMindtree. With a profound understanding of the dynamics of talent management and an unwavering commitment to employee growth, she is known for her exceptional leadership and dedication to fostering a positive and inclusive workplace culture. As she's standing just next to me, I must say that her ability to connect with everyone creates a sense of belonging within the organization while ensuring that every voice is heard and valued. Please join me in welcoming Chetna Patnaik.
Thank you. Thank you, Madhur. Is it working? Is it working? Thank you. A very good evening to all of you. And thank you for coming to our Mensa campus and making the evening more exciting for all of us here. So far, you have heard DC, Nachiket, and Sudhir talking about our bold $10 billion ambition, the AI pivot, and the scale verticals such as BFSI and technology. Now it's the time for the talent, and therefore, I would like to take you through that how, as an organization, we are gearing up in the talent area to make our organization future ready. Before going there, I would like to take you through a little bit of snapshot about the human capital of LTIMindtree. We, as an organization, have got a strength of 84,000 plus people base, and we are growing. Our retention rate is at a good level with an active focus on the diversity. As an organization, we are operating more than 42 countries globally with a people base of more than 100 nationalities working with us. To define our talent strategy in line with our bold 10 billion ambition, we did a series of dipstick surveys to know what actually our talents are looking forward to. Let me tell you that very simply, they're looking forward to the 4 areas: higher flexibility at workplace, access to cutting edge and deep technology, faster career growth, and the 4th one is, on top of everything, is an inclusive, empowered learning culture. For this, our simple talent strategy is that we want to become the preferred employer of choice in the area of attracting talent. We would like to have a continuously uniform, consistent, high-tech, technology-based environment with a high-touch experience for our people. And we also want to give them a continuous learning culture wherein they will thrive and grow. I would like to take you through the attract area first, wherein we have a differentiated hiring strategy for the fresher hiring as well as for the lateral hiring. In the area of fresher hiring, we focus on the left shift hiring, wherein we do a consistent, continuous industry academia connect throughout the year, wherein we prepare the campus talent much ahead of time and we make them future ready for the customer requirement. In the lateral hiring space, we follow a recruitment model of hire, train, and deploy, wherein which helps us for hiring at scale, as well as for some of the niche skills such as ServiceNow, cloud native, and cybersecurity. This actually helps us in terms of leveraging our green channel process of encouraging the ex-LTIMindtree talent to come back, return back to LTIMindtree. We also kind of have a strong referral network, as well as our alumni network helps us to get the best of the talent working with LTIMindtree. While our effort continuously is there for getting the best talent at our organization, but we also are committed to provide a superior experience to the candidate until they're onboarded as an employee, with all the touch points they interface with LTIMindtree, from the time of they get in touch with the first point until they are onboarded. And this is an AI-enabled process wherein we provide a delightful experience for them. As you know, and we have been talking from last 2 hours, that the world is changing, expectations are changing, and the talent expectations are changing, and there is a higher flexibility expectations from the talent at the workplace. And therefore, our effort towards bringing the work to talent, wherein we have expanded and somewhere we have strengthened our delivery bases on different offices across India as well as outside India. Some of them are, we have expanded in Calcutta, we have launched a new center in Indore, we have strengthened our base in NCR, we have gone to tier 2 cities like Bhubaneswar, Nagpur in India, as well as outside India is like Costa Rica, Spain, Mexico, Italy, China, as well as we have strengthened our base in Poland. In the area of engage, every organization will create an edge if their connect with the employees are going to be deeper. And therefore, at LTIMindtree, we are reimagining that what talent experience we will give to our people base. Our recent initiative of Rhythm talks about creating an enhanced employee engagement framework, which will create a sense of pride and belongingness in our people by giving them and encouraging them to work in a connected and collaborative environment. Rhythm is all about celebrating our people for their contribution to the organization, recognizing them and valuing them. Let me tell you that it has actually received an overwhelming response from our associates across globe. And this entire Rhythm, that Employee Connect has been enabled with AI, wherein we give them a high touch through a high technology environment. In the area of gig, there has been a lot of aspiration for people to work beyond what they are doing. And therefore, our internal gig platform encourages the associates to work beyond their role in real-time projects and complex, challenging projects, wherein they get an opportunity to work something different than what they have been doing, and that helps them to build their future-ready aspirations. The last area is Thrive, which is actually the one which will help people to build their career and help them to learn and grow more in the organization. It is in two parts. One is the role-based cross-skilling, upskilling. We have a platform called Talent 3.0, which encourages the employees and associates to have an assessment based on proficiency level and then bridge their skill gap, which is recommended by the Talent 3.0 platform. As an organization, let me tell you that with respect to AI capability enhancement, almost 500,000 hours we have spent behind AI enablement. In the leadership development framework, our leadership development framework is called Leaders Guild, which actually touch upon various role-based personas in the organization and helps people to groom them in the organization development programs. And we have partnered with INSEAD Singapore. We have also have partners with Ross School of Business Michigan, HBS, and LSE, wherein we put our leaders or the upcoming leaders and build the leadership pipeline for the organization. These two initiatives, which is functional as well as the leadership, helps the associate to create their customized learning journey and help them to create their career path in the organization. Now, so far we have discussed about what is that as an organization we are doing in the area of AI in the entire talent value chain. Let me give you some more insights about what we are doing for the new talents for AI. As you know, and we heard Nachiket talking about underwriters, which we heard about wealth managers. So these are some of those requirements which are upcoming, and we are looking forward to getting those talents from with core industry experience. The skills of learnability has become more essential for evaluating the talents, and therefore there has been a shift from the regular coding to the high level of cognitive capabilities with the problem-solving skill sets. Now, all these things is required to have an AI-enabled culture, and LTIMindtree is consistently working towards building this AI culture in the organization to make our talent future-ready, as well as enabling those AI adoption in the organization, in the HR function, to make sure that we are making our organization enabled for this kind of skill sets. As a HR professional, I believe that culture plays a significant role for any sustainable AI journey in the organization. And with all these things, there are three important things which are required is the tool set, mindset, and skill set. So far, we have heard our leaders talking about the various platforms, partnership with the product vendors, in enabling the organization having the right tool set for our people. The mindset which is required is the agile learning mindset, which will help people to be curious, to learn more and more, and help them to grow in the organization. And the skill set, which, as we spoke about, is required, which are the futuristic skills. I think with all these three, the organization will be ready to bring the AI culture in the organization, as well as will help in bringing our AI journey and will help us to reach our 10 billion journey. Thank you.
Chetna, that was an inspiring presentation. Thank you very much. You highlighted how our focus on attracting and nurturing talent is driving tangible results in our organization. Key takeaways include leveraging niche skills in our hiring practices and the compelling initiatives we have implemented to foster an environment where our employees can thrive. Okay, so now I have the opportunity to introduce a key figure in our organization, someone whose leadership and financial acumen are driving forces behind our success. As the CFO of this great organization, he is instrumental in navigating the complexities of an ever-evolving financial landscape, exhibiting an unwavering dedication to transparency and excellence. Ladies and gentlemen, Please join me in giving a warm welcome to Vipul Chandra as he comes over to the stage.
Am I audible? Audible? Okay. Thanks, Madhur, for that glorifying introduction. But I think let the audience judge that. So I'll take the feedback after that. Good evening, everyone. And just to scare you, welcome to the LTI Mindtree Investor Day. We're just getting started. On a serious note, since I'm standing between you and your favorite Q&A session, I'll not take that much time. I'll straight away come to the point. I think so far you have heard our leaders talk about our strategy and vision for the future. I'm going to try and now put a numerical context to it. And in addition, I'll also talk about how we'll look at charting this journey going forward. We have been always talking about and focusing on building a consistent, profitable growth path for our company. And so predictably, and CFOs tend to be that, right? The title of my presentation is also Consistent Profitable Growth. Like Sudhir said, this deserves a laugh, right? Okay, so moving on, I think first I would like to just talk about the growth aspect of it. Now, I think all of us are aware that the last 2 years have been a challenging 2 years for the industry. But despite a slow period in the industry, which was characterized by, which was characterized by client decision-making delays, elevated deal cycles or expanded deal win cycles, slow ramp-up of deals, and reduced discretionary spends, LTI Mindtree has still achieved a consistent industry-leading growth over a long period of time with a healthy profit margin in a band of 15 to 18%. I think last 2 years, as Sudhir talked about and DC also talked about, have been characterized by, or have been driven by vendor consolidation deals, which we have come out on the right side of it in most cases, or as Harsh said, in all cases, and cost efficiency driven deals, which have been a focus for our customers in the last 2 years. However, what has been helping on this journey? I think our new scale of operation has definitely given us multiple benefits. One of the first benefits I would like to talk about is that it has given us a balanced portfolio. What do I mean by that? With balanced portfolio, I mean that we have now got a balance between long-term business or long-term core business and the discretionary business in a portfolio of revenue, which gives a very healthy mix of revenue profile for future growth. Additionally, if you look at our combined capabilities and the combined balance sheet strength, that has also given us the ability to participate in large deals, which Sudhir already talked about, and that ability has given us more opportunities to participate in larger number of large deals that we are now targeting. Our strategic initiatives, like the programs which Sudhir talked about, Minecraft 2.0, Aspire, have helped us to penetrate deeper into our client wallet and increase the client wallet share. At the same time, we have managed to expand and also retain our customer base by retaining and by penetrating deeper into the existing customers and also signing up new customers and the MSAs that we spoke about earlier. Overall, this positions us well for the return of the discretionary spends, which will make the most of once the discretionary spend returns. Through this process, we have emerged stronger. Okay? And if you look at our strong points, we have scaled verticals, customer verticals, which we spoke about, the BFSI and technology, media, and communication verticals, which contribute almost 60% of our revenue. And both of them are $1 billion plus verticals, but still have significant room to grow given the large IT spends which happen in these sectors. If you look at our other verticals, manufacturing at $820 million, consumer business at $650 million, again have significant room to scale up. So there is a scope and scale available for us to scale up towards our aspirational goals. Our positioning today in the market gives us the agility of a mid-tier company or a mid-cap company. At the same time, it also allows us to participate in large deals that we talked about. This positions us at the unique cusp where we can be agile to be closer to our customers, at the same time, be able to compete with the larger players and take away business wherever we need to or wherever we want to. So that's the disruption that we have been talking about in the previous sessions. In terms of our capabilities, again, we have now got a full service capability across the organization. Our strength areas include data, digital engineering, cloud and infra, enterprise applications, and all of these strength areas position us very well to capitalize on the upcoming Gen AI wave, which we have been focusing upon as a strategy. So we are playing to our strength in making our strategy as well. In the last couple of years, we have also grown our customer base, or the customer pyramid, I would call it, with our top 5 customers moving from $900 million of contribution to almost $1.25 billion of contribution to the revenue. At the same time, we have added a good number of customers in all our client buckets. The buckets being $50 million plus, $20 million plus, $10 million plus, the kind of statistics which you are all familiar with. We have also invested in building up our AI capabilities, both in AI tools and platforms, that some of those you have already seen outside today, and we'll get more opportunity to go and visit those booths again. And also in terms of upskilling our talent for tackling the coming wave of AI. At the same time, we have also continued to make investments in our expansion of our facilities and our presence across the globe. We have opened up offices in 10 plus new countries like China, Taiwan, Brazil, Greece, South Korea, and some of the examples or some of the names Chetna had also spoken about. So since there are so many, I'm not taking all the names, but suffice it to say that we have kind of expanded our global footprint and taken it closer to our clients as well as to the talent. Similarly, in India also, we have kind of expanded our footprints in areas where talent is easily available. Again, helps from a finance point of view in keeping costs down. So we are going to other cities where talent pool is available, where we can get more stable talent supply. So we have opened up offices in Indore, Coimbatore, Kolkata, Noida. But at the same time, we have also expanded capacities in places like this facility in Bombay. We have also expanded our seating capacity in Hebal in Bangalore. We have expanded our seating capacity in Hyderabad. And in the upcoming 2 years, we are also going to add another 10,000 plus seats in Chennai and Kolkata. So our investments are also continuing during this period. And I'll talk about why these investments make sense, right? When I sum it all up. During this low growth period, we have also played on some other levers which have benefited us. So our utilization levels have gone up in the last 2 years by about 3+%. Revenue per employee has steadily moved up from $48,700 to about $53,000 over the same period of time. Now, this is a key metric that we very closely monitor. It kind of gives us a pulse on how productive our workforce is and how we can kind of, if there is a drop in this, is there something going wrong which we can try and correct out? I'll talk about it later as well. We have also focused on optimizing our effort mix between onshore and offshore. And that again, we have been able to kind of target a level which is working well for the customers, but at the same time, also helping us in our margin program. We have also made continuous efforts to reduce our subcon costs, and that all of these things have helped us in the margin side in the last couple of years. Now, margin expansion is not a one-time exercise or a single point-in-time exercise. It's a continuous effort, and it's a continuous discipline which has to be maintained. The moment you let loose on the discipline, you can slip up. So which is why we have an ongoing program which we call internally as Project North Star, which has 4 pillars which it is targeting. Now the revenue growth pillar we have already spoken about at length. I think last 2 hours we have been talking about how we are going to use AI as a pivot to target our growth and increase our revenues and penetrate deeper into our clients. So I'll not talk about that as much. I think the second point in the first pillar is about matching the right skills and the right roles so as to be able to get the right pricing as well for the same. Now that is a very important pillar, or that is a very important lever which is useful in that pillar. At the same time, the other pillars which are there, on the cost side, we are looking at or continuously looking at optimizing and balancing the pyramid. Again, depending upon the industry cycles, the pyramid does tend to get disturbed from time to time. Depending upon the customer demand coming back to the market, how it comes, what period of time it comes, again the pyramid tends to get disturbed. And you have to continuously keep on correcting the pyramid as things stabilize and as the growth continues. At the same time, as Chetna talked about, we are making a lot of efforts on the HR side to engage more with our employees. The effort is to kind of reduce attrition, to slow down or to reduce the impact of replacement hiring, as well as bring down average costs as a whole. We are also looking at continuously right-sizing in our managed services portfolio, because that's the portfolio where once the more experience you gain, the more productivity you can get out of it. So that's again a continuing exercise. We have talked a lot about already the investments we are making in automation and AI internally within our organization. Of course, that is driven from an objective. From a finance point of view, for me, it's driving productivity. So that's another important lever that we are looking at for driving the productivity and margins in the future for us. And the last point is the most mundane, keeping an eye on discretionary spends, but again, very important, because this is again something which allows you to keep your overheads at a significantly lower level as we go on our growth journey. Moving on, I think in the last 2 years, we have also been very focused on improving our operational efficiencies, as a result of which, if you look at our balance sheet parameters, our free cash flow has improved significantly in the last 2 years. As a percentage of net income, it has moved from 55.6% to 105.5% in last year, FY24. At the same time, our DSO, both billed and unbilled, have shown a good consistent reduction from 90 days to 81 days now. Both of these things have led to a buildup of cash and investments on the balance sheet as well, which is now at a healthy $1.4 billion. Again, an addition of $400 million in the last 2 years, in spite of an increasing trend of dividend payout. So, all in all, the balance sheet is looking very healthy, and it gives us the flexibility to continue to invest in future growth initiatives or strategic acquisitions, which are some of the things which DC talked about in his opening remarks. Very important, we continue to prioritize and focus on our ESG targets as well. It's, I would say, ingrained in our organization DNA as well to some extent, or to a large extent. And I'm happy to say that if you look at our targets, which we had set out for ourselves a few years back, most of these targets we have made considerable progress, or I would say more than half the journey. So if you look at our environmental targets, the use of renewable energy, we have already reached a 50% mark. While the target was to reach 85% renewable energy usage by 2030, we are already at 43%. Waste recycling, we have reached a 95% mark already. We have also reduced our Scope 1 and Scope 2 emissions significantly. On the social side, again, on a diversity score, if you look at it, in most of our targets, we have reached 50% or more in terms of achieving the targets. On our CSR programs, where we had targeted touching 4 million lives positively by 2030, we have already reached about 2.9 million lives. That talks about the efficacy of our CSR program. In line with our parents' tradition and our own goals, we have always maintained very high standards of corporate governance. I'm sure most of you would agree with that. If not, Again, you can at least laugh. Again, for this, we have been continuously using training and certifications as a way to, one, train our workforce in the highest ethical standards and integrity, and at the same time, continuously benchmarking ourselves. And the number of accolades that we have won in all the three dimensions also give us the confidence that we are on the right path and will continue to be following this path. So with that, I come to the last slide, where I'll just try and sum up everything. So what is this entire journey all about? This is a journey towards our aspirational goal of reaching $10 billion of revenue, which can be understood in 3 phases. The first phase is consolidate. Now the example I have, or the picture I have used is deliberate, because I wanted to show an example which relates it to the nature. So if you look at a seed which grows into a tree, the seed spends almost 30% of its life under the ground, out of sight, consolidating its root network so that it provides a stable base for the tree of the future to grow and sustain. Similarly, in last 2 years, we have been also consolidating our base, our balance sheet, and our capabilities to provide a solid base for the future, which is what we have been talking about so far. The second phase is invest, which also has been ongoing alongside. So we have been investing at the same time in super scaling our client verticals as well as our product horizontals, building up our AI capabilities, and building up the talent of the future, as well as keeping some ammunition for potential acquisitions as and when they make sense. This is what will help us go along in this journey. And what is the third phase? The third phase is where we start achieving some of our goals. The first being achieving a target of 17 to 18% EBIT, which is an immediate but not the ultimate goal. It's an interim goal, and as we continue on our path to $10 billion, we'll continue to then optimize between revenue and growth as we grow, as the revenue and profitability as we go along. And ultimately, this journey is going to continue. So this entire journey is also going to continue to prepare us for catching the next growth curve, which I think Nachiket also talked about the various growth curves that the industry has also gone through. So with that, I come to the end of the presentation and hand it over to Madhur again. Thank you.
Thank you, Vipul, for that meaningful walkthrough. It highlighted not just our company's resilience amidst challenges, but also our strategic initiatives that are paving the way for our future growth. We appreciate your vision and the clarity you have provided on our path ahead. Okay, as we move ahead, let's take a moment to witness another powerful testimonial from a German multinational technology partner on how we are unlocking new possibilities and driving success by joining forces.
Siemens Digital Industry Software and LTI Mindtree iNEXT are all about impact. Our mission is simple and focused, solving real business problems and delivering results you can measure. By combining our expertise, we're not just driving growth, we're hitting performance targets that set our clients up to lasting success. But it's more than just numbers. Together, Siemens DI Software and LTI Mindtree iNEXT are redefining industries from the ground up, creating real change that helps organizations thrive in a world that's moving faster than ever. Here in North America, where we first launched this journey, we're working strategically across key industry verticals. Our business plan is laser focused on aligning digital threads, engaging early in the sales cycle, building strong training and enablement programs, and unifying our marketing efforts. This approach is helping us deliver deeper value and stronger relationship with our joint customers. With Siemens Accelerator product portfolio, we're also leading the change on AI and generative AI. By streamlining workflows and optimizing automation, we're empowering our customers with smarter, faster solutions and keep them ahead of the curve. This partnership between Siemens DI Software and LTI Mindtree iNXT marks a powerful first step towards greater heights. Together we're building a scalable foundation, transforming industry, and opening new opportunity. And with these alliances, we're set to reach new peaks in innovation, productivity, and success.
Ladies and gentlemen, yes. A thunderous round of applause, please. Once again. I must compliment you. You've been a wonderful audience, by the way. All this time, you've been patiently hearing us. Now it's time for us to hear you. Yeah, I'm referring to the Q&A session. And for that, I would like to request Vikas Jadhav from the Investor Relations team to take it over. But at the same time, I would like to request our leaders, DC, Nachiket, Sudhir, and Vipul, to kindly come over to the stage, please. Ladies and gentlemen, a big round of applause for our leaders, please.
Good evening, everybody, and thanks for being here. Very quickly, we start the Q&A session. Just announce your name and the firm. Also, please note that all the presentations will be uploaded on our website. Request to maybe restrict yourself to 1 or 2 questions and maybe come back later. And one more thing, I'm sure some of you must have missed the AI showcase. So that AI showcase booths will be open till 8 p.m. While we break from here for networking dinner. So you can also visit the AI showcase. So with that, let's start the Q&A.
Yeah, hi team. Good evening and thanks for the opportunity. This is Atul Mehra from Motilal Oswal Mutual Fund. Sir, there's no doubt you'll reach 10 billion. If you could throw some light on when would you likely reach this on an organic basis, maybe we can start with that.
You sounded so confident, so you should know the answer also.
I need some help from AI.
Okay. Look, I think the thing is, you all heard about one thing, that we have been very focused in terms of getting the foundation right. And I can tell you that we have done a great job in terms of getting the foundation right. Now, based on that foundation, we also need a few steps for the acceleration. And if you look at what has happened in the market in the last 2 years, or when I say last 2 years, you're talking about FY24 and as we are at this point of time in FY25. We are hoping that this cannot go on forever because there has to be some discretionary spend coming back, etc., etc. The IT industry has been growing at a certain pace in the past, and there has been a lot of talks whether it will continue to grow at the same momentum or not. But if you assume that this a double-digit growth will come back, and if we can consistently have a double-digit growth, then our estimation is that by 2031, 2032, we should be able to get to the $10 billion mark. So that's the thinking right now, and honestly, it has taken a lot of effort to set the foundation right, get the leaderships in the right places, focused on the right go-to-market, and we are very confident that we have done everything right in terms of creating the AI culture in the company. And as I said, AI is probably not like any other change where you can just do it in one part of the organization and ignore the other part. It is, and from that perspective, we feel that the entire organization is behind us. I think you might have seen some of the use cases we have demonstrated in the AI showcase, and these are all real. So we are, whatever you heard today, all the use cases, I don't know whether you realize that these are not POCs. These are all real use cases which have gone into production, which I feel is something commendable that we have done, and we have got absolute ready from the perspective of getting into the future.
Thank you, sir. So just one other follow-up in terms of growth trends in the more near term. How do you see that, and can we see visibility of double-digit growth in the next financial year? Any trends on that? Any commentary around that same? Thanks.
Well, I think what you see and what we see, from an LTI Mindtree standpoint, I always say that it's a reflection of my clients in my portfolio. And if I go by that, I think the discretionary spend is no way back. The only spend that we are seeing right now is the regulatory work that we have to do for many of our clients, especially BFSI, and also the investments that our clients are making themselves for, as we said, everything for AI. Clients also need to get ready with respect to their environments in terms of the infrastructure, data, guardrails, so on and so forth. So, if I just take into these two aspects, this will not really drive the growth that we have been talking about. So we have to see the discretionary come back. That is probably something which everybody is waiting for. The big event is over. The big uncertainty is over. Now, after the uncertainty is over, based on the results, now people are worrying whether, what are the new restrictions the Trump can cause. But we don't need to look so much into it. We have to just wait and watch. The clients are going through their budget sessions right now. So within 1 quarter or maximum 3 to 4 months, we'll know in terms of how the clients are looking at their future. That will give us a perspective in terms of how the FY26 will shape up. But we don't want to get ahead of ourselves.
Yeah, hi. This is Sulabh from Morgan Stanley. My first question is on the competition. In the first session, we highlighted quite a bit on the competition that we are facing from the boutiques this time around. And my question is that boutiques have been around for quite some time. So what is so different about the competition that we are facing now versus in the past?
So I think if you look at one change, and DC highlighted that in terms of our own approach when we say we want to disrupt platform operations business, because in a way you can call ourselves boutique in that market because we don't have a current strength and we are taking a unique approach. So similarly, I think what AI is doing is it is lowering entry barriers in service line areas. So the areas where you probably needed scale to play, you not necessarily need scale to play anymore because it's changed the dynamics and the contours of those service lines. So certain type of boutiques become more relevant and we end up competing with them, which we probably would not have competed in the past. That's the way you got to look at as a changing dynamics of the boutique.
Understood. And the second bit is, we mentioned the new spend that we are targeting. So from your standpoint, where do you think that this new spend is coming from? Is this repurpose of the spend that the clients are doing from elsewhere, or is completely a new cost to the clients?
So let me answer that, and then I'll request others to chime in. See, what happens is, this is my experience talking to a lot of clients. There is also a lot of confusion about AI, which means clients, CXOs, are also figure out where they can invest in AI so that they can get the ROI very clearly defined. And this is predominantly happening because you must have heard a lot of noise about how do you get the ROI from the cloud investments clients have done. So people have also got a little cautious. So what clients do is, before they jump into the AI bandwagon, before they invest a significant amount of dollars in infrastructure, they actually work with us. We have the platform where we experiment with them and build some use cases. And once we are convinced about the use cases jointly, that yes, this will yield results, then we know that, this is something which will be very beneficial. I mean, I'll give you an example where I was very closely involved. The insurance client, where they had a scenario where they wanted to, there are 200 applications they wanted to migrate into the cloud. And they were not very clear in terms of how long it will take. And it was almost like a 24 months journey minimum. But they ran a pilot with us. We did the modernization, the code conversion, leveraging AI. But once they were convinced, then we actually set up the same platform in their environment. Now, when you set up the environment for them, that's a new cost for us. I mean, the new cost for them, and it's a new revenue for us because we are setting it up for them. So same way, a lot of clients, when they decide that this is a specific AI use case they want to pursue, there will be investments in terms of infrastructure, data, etc. where we can participate, and that becomes a new revenue for us. Nachiket, you want to add?
Okay, understood. And the last bit is that in this pivot to in the delivery organization that we talked about, how does this translate into our P&L, as we move forward? With respect to a particular level of growth, let's say, how does it translate into the mix of volume versus realizations and the gross margins as well?
So I think if you look at purely AI and its impact, I would say that over the medium to long term, it will be margin neutral in the sense that the pricing will stabilize in terms of what those benefits are and how it gets translated into the competitiveness of the deal that we bid for. But what it will definitely do is, it will, because as I talked about it being largely a productivity lever, it will steadily change our revenue per resources metric that Vipul talked about. So as we look at delivering more with the same dollar, we would see a productivity change in our delivery organization and not necessarily a margin profile change on AI alone. There are other factors DC and Vipul both talked about that will influence the margin program, but I don't think it's AI alone would have a direct correlation to the margin in medium to long term. In short term, it might, because if we are ahead of time, it might give us some advantage for some period of time, but not on a sustained basis.
Thank you.
Yeah. Hello? Yeah. With Trump, he is expected to deregulate businesses. It is estimated that will result in $4 trillion of M&A. And of course, that will benefit banks a lot. And of course, as much as they'll benefit from the tax reduction that might take place. And that this is bunching up of M&A that is probably likely to happen. And given that you have such a large exposure to BFSI and tech, in your historical context, when M&A spike like this, does it increase spending or does it increase business for you?
So I think it's a little early to comment on exactly what is going to happen there. I think it's going to...
You take that as a base case if that's the question. $4 trillion of M&A.
No, I think Harsh talked about how we're already benefiting from M&A and divestitures in the banking space itself. And you're right. See, I think that's one of the things we've, in fact, especially on that front, right? There is a combination of work that involves something called a TSA, right? So it's a very time-bound thing. Most clients have to complete that work within 2 years to 3 years in order to actually get the tax breaks and all the other things that go along with these acquisitions. So we've created a good playbook for that. We have that not only in banking, but also in the manufacturing space, et cetera, where some of these M&A and divestitures have happened. So if that were to play out, I think we have a strong play, as you mentioned. So that's, but we'll have to wait and watch. I think it'll take some time for that to play out.
Vipul here from Nuvama. This side. Yeah, hi. Yeah. No. So DC, my question was again on the $10 billion target that we're talking about. Of course, the confidence is of course there, but if you see all the other larger companies that we have in the industry, most of them were able to achieve the kind of numbers and the kind of size in an industry which was very less penetrated. We had players like IBM which were losing contracts and we were able to grab market share from that. Europe wasn't as penetrated as much. This time when we are aspiring to grow from let's say $4 billion to a $10 billion, we already have a high level of penetration in the industry. We ourselves have already more than 100 Fortune 500 clients. So apart from the industry growth, what other things do you think, what is else do you think that can take us to those levels? Is it that we are going to grab market share from the larger Indian players? Is it going to be more the global players that we're looking at? Or maybe the verticals that we're not large enough in? So any color on that would be really helpful.
I think we have already covered that. See, we said that our journey will be very unique. We also said that our journey is not going to be easy. But at the same time, we also said there is a red ocean right now. And we have, significant part of our growth that we have had in the last 2 years, there has been red ocean in which we have come out as winners, as favorable. And we have to have a strategy for that as well. So given all these scenarios, these are again tying down to the foundational elements that we have already setup. And again, if you look at the, I think, one of us talked about balanced portfolio. So we have kind of done everything for us to ensure that we look at annuity contracts, we look at it in a different lens. Now, there are some other changes also we need to do. We need to slowly move from input to output to outcome. AI will actually help us in terms of leading to the outcomes. But to the larger point, if, the good news about IT is that clients leverage IT for two purposes. One is you are looking at efficiency. Other one is you are looking at IT to shore up your revenue. If you look at the entire digital transformation wave that we had, IT was leveraged in terms of how do you reimagine your business models and how can you shore up your revenues, beef up your revenues. So I think in some shape or form, AI will also play a very big role in terms of clients thinking of how to reimagine their business models so that their revenues will increase. And when that happens, we should be able to play a role in that as well. In fact, there are quite a few projects that we are doing where the AI component is probably 20%, but the remaining 80% is the components which Nachiket described as everything for AI. What do you need to do for a client to actually execute AI programs, because you don't have the infrastructure ready for it. And we spend a lot of effort in terms of working with the clients to set it up, which is a brand new revenue for us. I think that trend will continue significantly over the next several years, because many of the clients are still getting ready in terms of, there are a lot of POCs going on right now, but there are not so many use cases where things have been moved into production. I mean, that is something which I can say with a lot of conviction, that whatever we are working on right now, our objective is that can we help our clients to realize the benefits, and the benefits only come if they can move into production. So these are some of the aspects that we are focusing on right now, but yes, our expectation is that AI will also help in terms of helping clients to increase their own revenues. So growth, there is a lot of growth that will happen eventually.
Got it, got it. On the AI front, is there a risk that we might all be overestimating the kind of growth it provides to the industry? I mean, there are talks definitely about a good percentage of clients getting disillusioned. I think in one of the conversations we had, that most of the CTOs today are, most of the organizations which are looking to implement GenAI today is like a hammer looking for a nail. So there are chances that these AI projects, is there a chance that this could end up like a blockchain, as you mentioned, that maybe the growth is not as much as we are expecting it to be?
Our assessment is that AI is real. Our assessment is that there is a bit of confusion. I think everybody is concerned about the ROI aspect. I mean, you don't want to invest ahead of time where you don't get the returns. But from whatever conversations we have had with our clients, I don't think anybody wants to be left behind in the AI journey. And I think we have a great role to play as a SI partner to help those clients navigate through the journey and leveraging the platforms that we have. Nachiket?
And also, I think what you need to understand is the AI's impact on various industries will differ in terms of its extent and its timing. But I think what is very clear, that the impact of AI on our industry is proven. So there is no variability or there is no confusion in what AI can do on the tech services side. So if you look at our strategy is pivoted around how we will leverage AI in our industry. And as DC said, as certain industries, when the confusion or the business case start to show up in terms of how it disrupts their industry, we will be ready to participate. But today, we're not saying, what also happened in the last 2 years with so much of capital chasing AI, is that people thought it is a problem to, its solution to every problem they've had, which is never going to be the case. So as that dust settles and people actually start to use it for the right problems, those right problems in those industries will emerge. But if you look at from a tech services standpoint, like the impact is fairly real and it's well established. There is very little ambiguity or suspense in that.
Got it. Just one last question for Vipul. So Vipul, I think 2 years ago when the merger between the two entities happened, we had talked about synergies, both on the revenue front and the margins front. I think the revenue synergies, the $10 billion takes care of that. But on the margins front, we had talked about expanding margins by almost 200 basis points over and above what the pre-merger margins of the two entities was. Now, the 17 to 18% range takes us to the pre-merger margin of the company. Do we still hold on the cost synergies benefit in the margins to trickle by? And is there any time frame, at least in our mind at this point of time, that we would want that to achieve?
Sure. Am I audible? Okay. So I think I covered it partially in one of my slides where I talked about the North Star program. And when we talked about the synergies, we also were talking about a certain market environment and a certain growth environment. Now, if that growth environment had continued, we probably would have achieved the target by now. Having said that, we have also called out when the environment changed that the journey might take a bit longer. And as I said in my summary, that 17 to 18% is an intermediate or immediate, but not the ultimate target. Now, the point is, from the current levels, we have to first get to 17, 18%. Then we have to again, look at the market conditions, how they are sustaining at that time, and balance out the growth and the profitability aspects at that time. So aspirationally, if you ask me the question whether 17, 18% is the end, no, I don't think so. That is the first immediate target. After that, how we balance the portfolio and grow, that will have to evolve as the market conditions change.
Got it.
And in terms of the timelines that you asked about, I think, again, I would go with what DC was saying, that if the double-digit kind of a growth returns and sustains, then the journey can be faster and gets expedited. Otherwise, most of the efforts that you take will just kind of, ensure that you stay and don't slip. So unless and until the growth returns, all the other levers will have an impact, but the impact will not be to accelerate towards that target. It will be moving towards the target, but it will take time then.
Got it. Thanks a lot.
Hello, sir. Abhishek Gupta this side from Axis Mutual Fund. Here, sir. So, sir, one of the statement made was today that whenever the new deal conversation happens, it starts with AI. But at present, if we see each and every IT companies are talking about AI and they're showcasing their capabilities and just saying that they are at the top right now in the AI. So I just want to understand that what edge which will you get through this AI right now, because everyone is doing this AI. So in this deal conversion because if you see our deal pipeline is strong, but our deal range, TCV range, is been in the range of 1.2 to 1.4 only. So I just want to understand what gives the LTIM right now edge in the market. If any RFQ comes, so they would be able to convert because everyone is doing this AI part, sir.
So I think if you look at the deals that we have announced in the last 5 to 6 months, includes the largest deal from a LTIMindtree perspective of 240 million. The AI-led story has helped us consolidate from 4 of the tier 1 vendors that were there in the customer ecosystem, right? So, and as you rightly said, everybody would have led with their AI story in that competitive scenario. But what has helped, what is the feedback we are getting from our clients, and Sudhir mentioned about it from the advisors, is that the AI story and the AI strategy that we have adopted, as the customers and advisors alike feel that our approach is one, far more pragmatic. We're not looking at tools and technologies for the sake of tools and technologies. We've not said we will develop a new LLM or we will develop a new tool set, but we have actually focused on leveraging the best tool available and changing the way of working. So if you look at our approach has been a culture transformation in terms of how do I deliver with AI rather than AI itself. And that is a very, very unique approach that LTIMindtree has taken as compared to many of our competition, who's continuing to highlight their AI tool set and their AI capabilities. We are not highlighting our AI capabilities and our tool set, but we are highlighting how we have changed the way we work. And that's actually made the productivity benefits that we are promising are real. In the example that I gave, when customers not only spoke to 2 or 3 leaders who made the presentation on AI, but actually spoke to 40 people who are going to deliver service for them and found the same consistent articulation, That's give them confidence that what we are talking is actually much more real and pragmatic. And that's not just one scenario. That's how the win ratios on AI-centric deals are changing for us. And the differentiation when it is cultural, there is no shortcut to it. And we have been at it for the last 6 to 8 months in making sure that it becomes a culture change inside of LTI Mindtree, and not just a PowerPoint or not just a shiny tool set that everybody would eventually have.
And so lastly, on the deal win side, so our pipeline seems strong, but our conversion seems to be at the same range only. So for going forward to reach the $10 billion of revenue, we have to increase this range, right? So what kind of strategy we are looking out there, mostly on mining side only, or we are going for some hunting part too?
Yeah, so I think, the overall order book, the 12-month order book is 5.7 billion. So it's running, significantly ahead of revenue. So I think that's the one data point that you should take away. The other is, frankly, the overall pipeline is north of $15 billion. So the real driver for the entire organizational, the growth momentum is going to be the overall pipeline. We've already talked about scaling the accounts, the Focus 100, the programs that we're running that we've run for the Focus 100. Now we'll expand it to another set of accounts as we bring in. So it'll be a combination, but it'll be a combination of the pipeline, the large deal pipeline, the overall pipeline, and how we scale our 4 strategic programs beyond the Focus 100 as we go ahead. So we'll see that pick up happening as this conversion starts to happen. I think the only thing is, as DC mentioned, the environment is still a bit cautious. It's still quite cost-led. So as if that also changes, you'll start to see uptake in the other areas beyond cost reduction in transformation, as we're seeing a bit in the pipeline. But if that expands, as discretionary comes back, that leads to another round of growth for us.
Sure. Hi, gentlemen. Thanks for those insightful presentations. This is Sudhir from Kotak Mutual Fund. Just one question. In Sudhir's presentation, actually, there is a data point that transformation deals now account for 24% of the pipeline, and this has seen a significant increase over the last 3 or 4 months. Now, if I contrast it with the subsequent statement made by DC that discretionary demand is in no ways back. So these two statements seem to be a bit contradicting with each other. I just wanted to get maybe double click on that contradiction. Are we saying it in a more broader sense, or is there any specific area to worry about, so on and so forth, in terms of return of the discretionary demand? If transformation deals are 24% of the pipeline, which has seen an improvement over the last 3-4 months, so why are we still saying discretionary is not back?
Firstly, you have a great name, huh? So. Okay, so I think, I guess, when I was talking about the transformation deals, they are the combination, when we talk about that in the pipeline, that's a combination of what we are seeing, for example, in SAP S4HANA, right? So the S4HANA kind of deals, they fall into that space. We're also seeing this big shift for data for AI. So, how do you get data ready for AI? The same data on cloud journeys that we saw a couple of years earlier, now we are seeing data. So those are the kind of examples of deals. I wouldn't call them purely discretionary because that has to happen. That is part of the transformation that they're doing in creating a simpler ERP ecosystem for themselves or getting ready for AI. The other part, I think one of the things that have been perhaps that I want to just underline is about $300 billion of CapEx has been spent on AI infrastructure already by corporations. This is reflected in the results of the hyperscalers, the NVIDIAs of the world. And that investment has to get monetized over a period of time. And that is the wave that you will see coming, which will also, and that is, so we also, Vijay talked about how we can participate in the infrastructure side, how people are setting up GPU data centers, and what can we do about, how we can participate in that setup as well. That is also part of transformation. So I think the definition, what DC was mentioning was discretionary as in, the kind of spend that we saw post-pandemic, right? Which was a lot of digital, so that's, I think it's just a question of how I've interpreted transformation in terms of what we've included in the large deals bucket versus what DC was referring
to. Yeah, hi. This is Nitin from Investec. So just wanted your thoughts on the AI side of things. So how much of the pipeline or not from a number perspective, but where are you seeing a lot of traction? Is it more on the pre-training, fine-tuning, or is a lot more on the app modernization bit? And how big either of these is broadly in terms of demand is the first one. And the second is any of these really considered discretionary in some form is the second one.
So I think you should look at it again in the same buckets that we have categorized, right? So if I take deals which are aligned to AI in everything story, which means that AI is the central part of solution that we are going after that. Now, in those scenarios, there are a lot of application vintage, the AMS deals, there are a lot of application modernization deals, and there are a lot of engineering acceleration deals. So that would be the type of deals that you will find in that AI in everything bucket. And as Sudhir said, the bulk of the vendor consolidation or cost optimization deals will also align to these stories, because that's what the customers are trying to do. And yes, it probably may not qualify as discretionary. The second component is what DC was just alluding to, the deals which are categorized in everything for AI, which means the money that they're spending new money that they're spending in order to get themselves AI ready. Sudhir talked about the capital expenditure done already on AI infrastructure, which now need to be monetized in order to deliver returns. So those aspects, now you can call it discretionary from a point of view of, it's not related to run the business for them, so hence it is discretionary. But having made capital investment, to your point, it is really not discretionary, because otherwise they won't get the ROI. So those deals would be basically setting up data fabrics. It'll be about getting AI clouds ready, the GPU infrastructure, model as a service, all the pieces that Rohit talked about in everything for AI. So a good part of the deals, as Sudhir just said, in the transformation bucket would be of that everything for AI type of deals, which is, we can call them discretionary, but really not discretionary if we want to get ROI on the capital that they've already spent.
So which is bigger? Is it the data fabric side or is it the app modernization side?
Sorry?
Which is bigger in terms of current traction?
I think AI in everything would still be bigger than the everything for AI, from a quantum of dollars perspective.
Okay.
See, where clients are coming from, especially when you look at the large deal space, is that many of these clients are either in the third generation or the fourth generation of outsourcing. So all the traditional levers, right, the level of offshoring, the level of automation, the level of shift left, all those levers there's no room left in those levers anymore. So the only new lever that they have, that they can see, which will drive down further cost, is AI, which is why that is the first conversation they have. That's the point that I think I'd like to make, is that's the reason, that's where it starts with that conversation, as to what interventions can you make that takes us beyond what we've already achieved.
Okay, due to time constraint, we'll have this as the last question. Sandeep Bhuvan.
Yeah, hi. This is Sandeep from Equarius. Just question in terms of the US election outcome is 3-week old. So your conversation in the last 3 weeks with the client, what it will take for them to start spending on discretionary? I agree this is too early, but are they slightly more open in terms of what they were earlier?
They did not have time for having conversations so far. They've been all very engrossed in terms of what was going on. But on a serious note, I think they have all started the budgeting sessions. We have to give them some time. Conversations are going on. The other day I hosted a client in one of our delivery locations where they talked about elections, they talked about results, they talked about budgets, but it ended over there. So we have to still engage with them in terms of what they want to do in terms of their budget. So I think it will take another quarter for us to understand exactly where they stand. But the only one thing which I can sense is that people are not talking about doing their budgeting and all those things, so which is a positive sign.
And just the second question, last question being, we have said that LTIMindtree is getting ready to disrupt the digital operations where our actually revenue scale is almost negligible. So what is the plan? Is it largely organic, more in terms of outcome-based pricing, or is also M&A we are looking for?
Everything is on the table. But we have spent a lot of effort the last, I would say, 18 months or so. You heard Krishnan talk about it. Krishnan brings a lot of experience in terms of digital operations. He has been a industry expert, and one of the mandate that he has taken is to figure out an AI-first approach to disrupt this space. That's what he has been doing. And there are a lot of good ideas we have come out with. And we feel that hopefully next 2-3 weeks there should be something that you will be hearing from us. But we will definitely be very open to not only disrupt, but do bigger things in that space if we have to. Because if you look at a $10 billion journey, and if you look at any company which has reached a $10 billion mark, they have a significant play in terms of digital operations. Platform operations, whichever way we call it. So we also need to, we cannot ignore that. And I think we have a great opportunity because if the disruption is happening, we would like to do a AI-first approach and look at the disruption because we have nothing to lose.
Thank you.
That was the last question. Thank you so much. On the behalf of all the leadership team, CXOs, CBU heads, the AI, showcase owners and cross-functional, people, we thank you for coming us and giving us an opportunity to host us. Our leaders will be available, for further discussion during networking. And just to remind you that, the AI showcase will be open till 8 p.m. Thank you so much once again.